Hello, bankers. A very good evening to all of you. Welcome back. Welcome to another session. I hope I'm clearly audible and visible to all of you. So, quickly join in so that we can start our today's discussion. All right, everyone. A very good evening to all of you. How are you all, guys? Reached home. Durgesh sir, very good evening. A very good evening to all of you. Quickly join in so that we can start our today's discussion and the practice as well, right? So here, Srikant sir is also there. Very good evening, Srikant sir. Okay, so guys, in this particular session, we are going to continue with our module B, right? So in our previous session, where we already started with module B, and morning we have done with till unit number 8, 16 आपका the concept part, 17 and 18 we will be discussing here only, right? So Subhas sir, very good evening. Chalo. So when it comes to module B, it is all about risk management, like the entire topic. The difference between module A and module B is module A where we have variety of things, right? When it comes to module B, things are kind of bit what it call it is all about the risk and risk related things, aapka, right? So every top we do have some sort of linkage around each others. So if you follow the sequential things aapka unit wise, that will help you, right? So first two topic is all about risk and the framework. The third one is all about your risk regulation, Basel norms, Basel 1, 2, 3, and very important one, right? Capital charge, one case study you can face around that particular one, calculation of RAROC or sorry, आपका CRAR, or as well as the different methods आपका for credit risk, operational risk and market risk. Then we have individual risk wise आपका areas. Then आपका the finally Basel norms or Basel 3 guidelines related to liquidity standards, right? So here in this particular session today itself, we will be we will be covering the maximum areas. So 11 and 12 we have practiced yesterday only, right? So those who have missed आपका previous session, please go through that. It will see you will see that particular one at the end of the आपका part A, part 2 of module A आपका, right? So now unit number 13, right? So morning only we try to understand the basic areas and all, right? Rani ma'am and we have Ram sir. Very good evening to all of you guys. So here, when it comes to unit number 13, it is all about risk regulation. So the important areas from this particular topic is first one is Basel 1, Basel 2, Basel 3. Then 1996 आपका amendments are bit important. Then we have this portion आपका capital charge. Then supervisory review process, four principle are there. Market discipline आपका another one, right? And some ratios आपका, right? So these are the areas which generally comes under in this entire curriculum. So the story when it comes to your the overall आपका BCBS story started with your 1974 Hersted failure, or that is also known as Hersted risk. It is all about the settlement risk due to time zone differences and all, right? So this is something आपका basically Hersted Bank need to make some payments, but before that due to the different time zone आपका horizon, ठीक है? So the German in between that particular settlement date of trade and date of settlement, German like bank आपका German regulators which generally liquidated this particular bank. So we escalated that particular one and we issue some sort of DOS mark against this particular bank, and then we means आपका BIS, ठीक है, Bank for International Settlement, they form a committee 5 group आपका which is known as BCBS. So then BCBS to deal with similar set of issues, they form a BIS form a committee, and BCBS will generally study all these particular areas. 1998 we come up with आपका Basel 1. Basel 1 is all about initially when it comes to the initial आपका areas, it was mostly around the risk management, credit risk management. Then with 1996 आपका amendments, we generally added the another area in this particular one, that was market risk. So initially Basel 1 is all about basically it was covering the credit risk. After this amendments, it was including the market risk also. The third type of risk, which is operational risk, which get introduced in Basel 3 itself, right? Basel 2 itself, sorry. So, आपका when it comes to 1996 amendments, which get implemented from 1998, please do not get confused with this particular one. सिक्स को आएगी, हम कैसे कवर करेंगे, ठीक है? Bhupen sir, like I guess there is some आपका misalignment in scheduling. So A, B, C, D, I'll correct this one. Actually, I'm not getting that time. I only create those all session and all, right? So I'm not getting that time to make that proper scheduling. So there is some like A, B, C, D we will be doing, and the last session we will be doing for the revision one. Okay, so I'll make that particular challenge आपका things streamlined. Like every day we will be having session. Today only we will be covering module B, means module B part 2 will not require, right? So tomorrow module C, then day after tomorrow module D, then आपका one comprehensive revision along with the numericals. So when it comes to Basel 1, ignore the risk from the trading book आपका, right? Yesterday only we talk about this. So 1996 amendment which introduced the आपका a risk capital charge for your trading portfolios or the market risk. So how we generally calculate? So introduce आपका tier 3 capital. Now it is merged with tier 1 and tier 2. So nowadays we have only two type of capital, and tier 3 capital is mostly used for to absorb the losses arising from in your trading book and all, right? So when it comes to introduce to explain capital charges for the market risk, introduction of आपका allow the VAR system, ठीक है? VAR required आपका computed on 99% confidence over the 10 trading आपका day itself, ठीक है? And tier 3 capital was introduced, short term debt, to cover the market related risk and all. So that was something which generally part of this one. Basel 2, when it comes to Basel 2 norms आपका, it introduced like it is kind of a reformed and refined way of Basel 1 itself, right? But we come up with a new system that is called आपका pillar system. So nowadays they are also part of the Basel 3 things आपका, right? So we have pillar 1, pillar 2, pillar 3. So this operational risk which get introduced in this particular one. So pillar 1 is all about the capital requirements. Pillar 2 is about the supervisory review, where organization means bank as well as RBI, which is making sure कि all these particular things are aligned. Apart from this, when you come to the ICAP plan आपका, that is generally make sure कि beyond this particular risk, ठीक है, whatever risk we are covering, if other risks are there, so we can make sure, like model like EWRM, which we have covered yesterday also, right? They make sure कि the other risk आपका which is ignored by this particular model, we can cover all those particular one. SRP, we have 4 principle आपका, and disclosure and transparency is the another one, right? So Basel, that is generally known as your Basel 2. So when it comes to principle of like the overall building आपका, ठीक है, then we come to Basel 3. 4 principle we have discussed in the morning one, right? So when it comes to Basel 3, it is again another transition, and this is majorly led by the global financial crisis 2007-8, right? So improve the stock absorption capacity of the bank, improve the governance and the risk management, strengthen the transparency, that is the area. So now when it comes to unable to log in laptop, is there any restriction? No. Just log in on the website. Saurabh sir, you can log in on application as well as in website after. Maybe if you have login on some other website, then it will create issue after, right? So for that, when you have to wait after, just do ping me. I'll log out from other website from the backend, then only you can access through the website itself, right? So now when it comes to the overall seat, nowadays, this is the present आपका areas or the division of risk. So where we have CET आपका capital 1, ठीक है, tier 1 capital which comprise 2 things, CET1 and additional आपका tier 1 capital. So when it comes to your this is tier 1 capital is core capital of the bank, which include आपका the equity, surplus, आपका retained earning, accumulated other comprehensive income in this, non-cumulative perpetual preferred stock and related surplus, and minorities interest, they generally comes under this particular one, right? Then when it comes to tier 2 capital, it include आपका subordinated debt, which was earlier part of the tier 3 capital, ठीक है, secondary debt आपका, ठीक है, qualifying आपका minority interest, then we have limited amount आपका gain on available for आपका sale of securities and others, which generally comes under this. So earlier we used to have 3 different areas, but now we have only 2 आपका, right? Now one chart is very very important to solve the CRAR आपका question, that is this, right? So when it comes to the overall areas, minimum common equity tier 1 capital is like overall we have to maintain. So this is something you remember that chart आपका 7, we have 9% CAR basically capital adequacy ratio, and then we have आपका CCB of 2.5%, right? So that is something which this additional आपका wall we created. अब now overall 11.5%, when it is operational in market it will become 12.50%. So now when it comes to the overall areas, so minimum common out of this 9%, minimum tier 1 required capital is 5.50%, and when you will calculating for the DSIB आपका, so additional surcharge, like in case of SBI it is 0.80, in case of SDFC 0.40, they'll be mentioned in the bucket list आपका, like 1 to 5, 1 to 5 it is started in the simple multiplication, 0.2, then आपका 2, 0.4, आपका 3, 0.6, 4 is आपका 0.8, and आपका 5 is 1%, right? Additional surcharge on your CET1 itself, right? So additional things which they are maintaining in this case. CCB can be आपका, that is 2.50% minimum. The minimum additional आपका common equity tier 1 ratio plus, so it is overall the total of this one 8%. Additional tier 1 capital, it can be 1.5%. Minimum tier 1 capital आपका overall, if you add these two, this plus this, that is 7%. Tier 2 capital can be maximum आपका 2%. Then we have minimum total capital ratio, that is आपका 9%, and overall if you add that particular one it becomes 11.50% आपका, right? So that is something which generally comes under this particular. So tier 1 and tier 2. So tier 1 capital, which is आपका paid up, surplus, reserve, retained earning. The importance of this particular one is to absorb losses while bank is आपका operational. When it comes to tier 2 capital, it is a backup capital, absorb losses during the liquidation things and others, right? Counter cyclical buffer is like, see, that is one additional one. So that is, and even sometime RBI relax that particular one, that is totally done by the आपका the central regulator itself. That is in addition आपका from this particular one, sir, right? So we'll talk around that particular. Counter cyclical buffer is something when you are having good time, we should save more आपका, and we can, so that we can use in our bad time. So this is something, this was a learning from the global financial crisis itself, ki what we found आपका, especially the bank from Nordic nation, they did not get affected आपका, the effect was comparatively very less because they were maintaining CCCB during that particular period. So that is something one additional one आपका, right? So that is like we have 2.5% or 2% आपका CCB, that is the base, but that is not part of that get calculated on the CET1 only, the tier 1 capital, sorry, but that is something key additionally which we are maintaining in that particular one, right? So that is the areas आपका. Now this chart we have discussed this one, how you calculate CRAR, that is eligible total capital divided by आपका risk weight asset. So total capital means your tier 1 plus आपका tier 2 capital, then divide by risk weight asset from the credit, market and operational risk. If you have to calculate CET1 ratio, it will require CET1 capital divided by total risk weight asset आपका, that is the case. So in general we have this particular, but the case is not only about this. Sometimes they'll give you the statement आपका कि there is a bank who is maintaining this आपका capital things and all, and then you have to make judgment आपका where it is where we have आपका additional or where we have less things in others, right? So now the ratio is there, but sometime RBI, like even recently 6 months ago आपका, there was some relaxation around that particular one, right? So that is not that strict rule आपका, that is come from I guess 2018 was the period when we not 2018 आपका, right? Later than even later आपका. that is something ki one additional thing आपका. So it is something like right now we are facing some sort of economic crisis. World economy is facing this geopolitical things and all. So the relaxations are there around that 2.5%, 3%, I guess, right? So we'll come to that particular one, Sirkan sir. So this is something, the overall capital building of the bank. Now when it comes to your capital charge for market risk, credit risk, and operational risk. So when it comes to credit risk, things are, we have two major approach. One is standardized approach, where we generally, it is driven by the ratings provided by external CRAs, credit rating agencies. Aapka, based on those particular one, we make the decision. When it comes to IRB, this is aapka internal model of which is developed by the bank. Mostly we are having this aapka in like when it comes to the practice itself, right? So it is a combination of probability of default, loss given default, aapka exposure at default, and maturity. These are the tools or parameters which we are using, and based on that we are making the investment decision in others. So we are accordingly catering to the overall what it is called the overall your overall capital charge for the aapka credit risk, right? So probability of default, which is likelihood of default over a specific horizon. Loss given default, proportion of the exposure lost if aapka default occur. This is aapka exposure amount likely to be default during the aapka, like even let's say we have given 100 crore rupees. When it comes to this, out of 100 crore rupees, like we are expecting this loan is for 10 years. After 7 years, the remaining 3 years aapka, that is in risk. Suppose that the 3 years aapka 7 to 10 or 8 to 10 aapka, right? So then their risk aapka out of 100 crore, suppose that 10 crore rupees in this, then we have some security. After that security also, there is some exposure which is in default after haircut and everything. Maturity is after the 3-year period, which will be that amount will be in aapka risk itself. So we have two approaches. One is FIRP, foundation. Another one is advance. Advance, in case of advance, maximum things which are generally decided by the bank itself. In case of foundation, things are mostly by the regulator itself, right? And the loss data which we generally take for 5 years, and here we generally take for aapka 7 years in others, which generally comes under this particular one, right? So morning only we talk around these particular things. Now the comprehensive approaches for the credit risk management is your aapka credit risk mitigation, CRM things, which is generally kind of a combination of all these particular one. What we are doing here, original exposure aapka, the amount which we have given, right, minus collateral value. So it is minus collateral minus haircut on the collaterals, right? Haircut is, I hope you remember this one. So let's say we have aapka haircut. Suppose that we have placed that particular security with gold worth rupees 50 lakh, right? So now the haircut on gold, suppose that aapka 5%. So that means it is 50 lakh minus 5%. So that is the remaining amount is your aapka risk weight asset, and accordingly you have to maintain the capital charge for that particular one itself, right? So that is something which generally comes under this particular one. So when it comes to this particular one, your aapka, which one you are asking, sir? Loss given data, right? So when it comes to loss given data and your, okay, I'll come back to this one. So when it comes to law, like see, the case is framed, sir. Okay, let's say first one is probability of default. Okay, this is aapka, let's say we have given a loan for 10 years, and based on the different aapka analysis or the industry business risk and all other overview provided by CRAs and others, we are expecting ki till 7 year everything is fine, but after 7 years there can be some sort of impairment or some sort of downgrade risk with this particular asset. So the likelihood of default over a aapka specific horizon. So the remaining 7 years, let's say out of 100 crore rupees, we have like till after the calculation of EMIs, principal or interest, we will be receiving all the interest amount, and the remaining principal is supposed at 20 crore during that period. So this is your probability of default, which is in aapka risk. Then aapka loss given default, proportion of exposure lost if aapka default occur. Now we have some security for this one. Suppose that the security is less than 20 crore rupees in that particular case, and if that default occur, suppose that we have a security of 10 crore rupees, the security value will be 10. So the remaining 10 crore rupees is in your loss given. Now exposure at the default, so it is means the remaining 10 crore, okay, the amount likely to drawn आपका during the default itself, so that 10 crore rupees, and how we will be आपका dealing. So probability of default is proportion of exposure loss default occur, that is 20 crore, sorry, ठीक है, this is आपका 20 crores, this is आपका 3 years, and this is your आपका after the that asset or the value of the present value of that future asset, or after haircut applies in others. So there is some portion which is still in आपका risk, that amount is your probability of default. Suppose that is 5 crore, 2 crore, 10 crore, or whatever amount it is. So that is something which generally maturity is the risk period आपका 7 to 10 years, or after end of 7 years means 8 to 10 years, that generally comes under this particular part. Prem sir. So now two areas found in case of foundation, mostly these used to आपका, and the historical data we are using for last 5 years of the bank. In case of this, we are using आपका 5 years. So this is based on the past experiences of that particular bank in similar type of portfolios in others. Retail exposure only आपका retail exposure only advanced IRB prescribe, where obviously the maturing parameters is omitted. Securitization provision in specialized lending have been आपका accorded आपका special treatment in others, that generally comes under this particular part itself. So the another one was आपका this one. Now apart from this, when it comes to capital charge for your operational risk, so we have these methods आपका. One is IBA, which is one of the simplest one, right? So the basically it generally take the gross income of last 3 years, the positive numbers only आपका, right? So and that is the average of last 3 years income, and your आपका alpha factor, which is 15%, right? So basically it is based on assumptions ki suppose that first year आपका we have last 3 years, in last 3 years first year we have like let's say in 2025 we have a profit of 10 crores, in 2024 we have a profit of 5 crores, and in 2023 we have a loss of suppose that 10 crore. So what we will be doing आपका, we will be not considering this, only these two आपका will get considered, आपका 15 crore. तो 15 crore आपका divide by 2, we will be excluding the negative year from आपका numerator as well as denominator into आपका 15%. So that is your आपका case. When it comes to standardized approach, what we are doing in this particular case, like we have defined beta factor for each business line. So BCBS 8 business classification, like corporate banking, where we have 18% beta factor, trading आपका 15%, retail brokerage आपका 12%. This is you have to remember. So let's say the gross income of that particular business line is for the corporate banking it is 10 crore. So 10 crore का 18%, that is your आपका risk weight asset in that particular situation. Now when it comes to the areas, then apart from this, the another one or the modern one which is we have, that is called आपका Basel 3 standardized approach. So it is based on the operational risk capital is equal to BIC into ILM. So here we have BIC, business indicator components, 3 range आपका less than 8,000 crores, 12%. The range is same 12, 15, 18. Then आपका in between 8,000 to 2,40,000 crores, it is आपका 15%. And if it is आपका more than 2,40,000 crores, it is 18%. And internal loss multiplier will be using the loss data from the past itself, right? So that is something how we are generally calculating this particular one. The next one we have आपका in case of this particular one, right? So we have IRM thing. Okay, integrated risk management. So that is board of directors, then risk management committee, then we have CRO, chief risk officer आपका. So independent must not be this you remember this. This is something which we have discussed in your ABM also. Very easy one, right? Let's come to the another one. Next one we have market risk. So when it comes to market risk, आपका it is it is deal with the trading book आपका. So we have open position in these particular one. So standardized duration आपका. Here we have two things. The time, basically the three different zone based on the areas. Like we have zone 1 आपका up to 12 months securities which we have open in your आपका trading book. Zone 1 up to 12 months, zone 2 up to your 1 to 4 years, more than 4 years, zone 3. Accordingly we have to charge the your आपका horizontal allowances will be calculated on that particular one, and as well as we have the other categorization, that is vertical allowances and all. So specific charge and general charge, two type of. Specific is related to your idealistic risk, protect against the adverse price movement of the individual security. When it comes to general charge, it is macroeconomics factors which will generally affect your portfolio, आपका portfolio itself. Two approaches, one is standardized approach, another one is IMA. So standardized आपका it's a rule based approach, but IMA, which is the modern one where we use आपका VAR or sensitivity analysis and all, and based on those particular one we make the आपका the decision around the your overall capital charge and others, right? So we will be practicing some question around the vertical and horizontal, and after vertical and horizontal आपका calculation, it will come to the your आपका overall risk weight asset, then you will be charging capital charge for those particular asset itself. So areas, the different one, we have vertical allowances at 5%, straightforward, right? So आपका with match position, instruments are not आपका identical, so the basis risk is there. So that's why we are creating a vertical allowance on the collaterals. 5% penalty charge on the match position of the match portion of the position. Match portion is the lower value. Then we have calculation applied to the smaller of the absolute value of the long term and short term position. ठीक है, let's say we have 6 month आपका, one is 150 or another one is आपका 6 month, we have 100 crores. These are the two open position, one is long position, another one is short position. So match position is this, you will be taking आपका 100 crores, 100 crores पे you will be charging a vertical allowance of 5%, then you will be calculating that particular one. When it comes to horizontal allowances, this is आपका related to, we have all the securities in your trading portfolio are categorized under the three different zone. One is zone 1 where we have 40% disallowance, zone 2 आपका 30% disallowance, and zone 3 आपका 30% disallowance. So whether they'll be mentioning आपका around the exact numbers कि this security comes under zone 1, zone 2, zone 3, or आपका it is if it is in between, if the security is in between आपका zone 1 and zone 2, तो 40% disallowances will be there. If it is आपका zone 2 to zone 3, again 40%. If it is zone 1 to zone 3, आपका it will ask for the 100% disallowances in this particular one, right? So that is something which generally comes under this. So for this market risk आपका, we have two core methods. One is your standardized approach. This is a rule based approach आपका. Rule based approach means we have आपका elements and elements which get driven by the that is a kind of a regulatory model which is nowadays outdated. We have some like the what it is called the financial models which we are using them. IMA is something which is based on the VAR things, or these particular one is generally like apart from that in IMA VAR calculation, after VAR calculation we are using the vertical and horizontal allowances for the integrated approach, the outcome or the final outcome which we actually do use in the overall आपका business activities and all. तो offsetting position across the different time horizon, time zone, sorry, expose the bank yield curve आपका, ठीक है. So like let's say this to this, that is the, if you are offsetting this with this or in two different time horizon, so that can the yield आपका, the return from that security can deviate in some different direction, and that can make an adverse impact on the bank overall profitability. So for this one, that's why we are making this kind of allowances. तो जो if it is zone 1 to zone 3 means we will be requiring a 100% आपका. If it is zone in between same आपका 1 to 1 तो it is this 2 to 2 3 to 3. But if it is आपका one zone to another zone 40%. If it is 1 to final it is आपका your आपका 100% case and others, right? Horizontal, हाँ, this is the rule आपका, ठीक है? This is like these numbers na they are specific, right? So like this is not kind of things ki I'm using aapka hypothetical numbers. So these are like they say that vertical disallowances is fixed at 5%. Here similarly here also these are the zone wise disallowances is also fixed aapka. Srikant sir. Okay guys, so these are the three major areas from your aapka this particular tool, okay? So and then it comes to the aapka practice. Apart from this we have one another thing there. This should be ICAAP. So this is your ICAAP. Please go through this one. So object is to ensure firm have enough capital to withstand all risk with the with its business model and strategy, supporting its growth and आपका meeting the regulatory expectation. Scope of this particular one is it covers the significant risk faced by the institution, including credit, market, and this आपका other risk not explicitly covered under the regulatory one. तो ICAAP plan is basically your like it makes sure कि all regulatory things beyond than that also if we have some risk involved आपका like any other risk आपका which is beyond that there should be some example involve the systematic process of identifying, measuring, managing, often using आपका economic capital approaches. Capital planning is ICAP inform the institution capital planning and the management process. Stress testing also it incorporate the stress testing. This model incorporate the stress testing कि if we face some sort of adverse situation in the market, how we are going to deal with that particular one, that is also part of this particular one. So this is a kind of regulatory connections. ICAP is a central component of pillar 2 your supervisory things, supervisory review process, which focus on supervisory review and ensure that bank capital level adequately reflect their unique capital profile and others. So it include why it is important comprehensive risk coverage. Beyond this particular one also improve the risk management things, strategic capital management आपका ठीक है, help link capital management with the institution strategic objective and decision making. Supervisory dialogue, it provide the regulator with the comprehensive view of the institution that capital adequacy आपका facilitating the आपका supervisory assessment and allowing them to determine any required capital above the minimum things. Like let's say capital tier 1 capital is that is a regulatory requirement. Up now bank are like some other risk which not get covered within that particular one, so that we are trying to develop with this particular model itself, okay? So it is something again a kind of a or it is a kind of a tool which generally comes under the risk based supervision for the bank itself. So that is something which is generally part of this particular one. Specific charge and general charge, that is no, that is not part of your this आपका IMA approach, ठीक है? So that is the आपका the first approach which is we generally use for the risk categorization, that is your what it is called आपका standardized approach, ठीक है? The specific charge and the general charge are mostly like that was the first model आपका how we are charging security based on the risk involvement or the rating itself in the securities itself. It is not related to the the case of your IMA things. So these are the three areas. Now apart from this, we have capital conversion buffer. Another key features Basel 3. Now bank are required to hold a capital conversion buffer of 2.5%. When it comes to CET requirement, it is generally get calculated on the CET 1 itself, right? So apart from this, we have, okay, capital requirement, this we have discussed. Counter cyclical capital buffer is 0 to 5%. It is basically it is learning from the, in the good time we are saving more so we can use for the bad time. LCR and NSFR, it is high quality liquid asset divided by your net cash outflow in 30 calendar days, and NSFR is आपका stable funding sources for that particular one, so available versus divided by standing. DSIP आपका the another one, the additional too big to fall, ठीक है, so that is we are maintaining a additional like those bank which are generally categorized under this particular category, they are maintaining some sort of additional capital itself. NSFR आपका it is available sources and required, and DSIP आपका this is something how they have to maintain this one. So DSIP institution whose failure would disrupt the economy. So this is something which is part of the your international what it is called आपका systematic importance, like internationally, domestically. So domestically when it comes to, so we have these three banks which generally comes under this particular one. The common CET1 requirement for the additional requirement, or which is generally known as surcharges, right? Sure. So this is something a kind of a brief for your unit 13. I know like this is bit lengthy. It required like even for just revision also, morning only we discussed the entire things. Still it consume our 40 minutes, but this is something which is the basic requirement which you have to have go for this one. Now today, first I have kept the small question, warm up question. Then just after that, we will be doing those आपका multiple statement based question also. Okay? These are the half marks question what you can expect, or the small question basically. The first one, the primary reason for regulation of bank is to ensure profit maximization and freedom from risk-taking financial institution. Regulation guide bank in developing robust internal risk model and methodologies for the measuring risk आपका or managing the risk. Core goal of the regulation is to impose capital requirement aligned with the risk profile of the bank or risk appetite. 2 and 3. Option B will be right answer for this particular one. The text is visible kya? Everyone, this is visible now. Option B. Muniswamy sir, option B will be right answer. Yield curve is it is basically it is something आपका like it is related to your bond things, and this is something ki like आपका when we are having multiple securities portfolio analysis when we are doing thing. So suppose that we are having multiple securities आपका, and if like sometime what happened like let's say we have 30 आपका 91 days treasury bills, or we have one another investment in 182 days. We are expecting कि both will move in same direction, and accordingly we have made some position, or in bonds also, right? Two different bond we are holding, we are expecting they'll move in आपका let's say we have link, both are linked with some indices, they will be moving in same direction, but sometime they deviate from that particular direction. One is moving in another direction, another one is different one. So sometime due to these particular one, and that lead to the basis risk for the bank itself. Next one, your identify the correct statement related to the risk regulation and the Basel committee. What will be your correct answer? B. Okay, so 1970s आपका a strong regulation and limited आपका competition in commercial banking reduced the incentive for the innovation and the change. In 1970s, strong regulation and limited competition, this should be correct. And the next one is deregulation promoted आपका competition and globalization, but also lead increase the systematic risk and others. This is also correct. Third one is the Basel Committee 1974 under the आपका under the Bank for International Settlement following the Hersted Bank failures and others. This is also true. The Basel Committee was established in 1974. This is also correct, right? So 1, 2, 3 means आपका D. So Basel Committee was established in BCBS basically when it comes to if this statement is around BCBS. So BCBS, which get Basel Committee on Banking Supervision 1974. When it comes to BIS आपका, it was in 1930. One of the oldest financial institution right now we are having. That is the case. So D will be right. No, not 78. Okay, it is like the Hersted risk आपका with the Hersted 1974 we formed this आपका BCBS comprising the 4 core groups and all. Then in 1988 it come up with the first set of advice line for the international banking, right? C. BIS was established. No, the question is around BCBS, so it is not about the BIS. So and BCBS is formed. So this is correct, huh? This is आपका also correct. So this should be आपका option D only. Both the data are correct here also, right? Next one, guys. Consider the following statement regarding the BCBS. Okay. Sorry, guys. Why you are not telling me I'm hiding the question? So the Basel Committee, a consultative group, and a macroprudential supervisory group is part of the 5 permanent group, permanent committee group under the BCBS. The second one is task force under the BCBS committee group are created for ongoing technical support and remain active permanently. No, task forces are generally for the temporary purpose, right? Let's say we are facing some sort of issues in some specific areas, and let's say the 5 permanent group, they are not having expertise in that field, so we form task group आपका, so they are temporary to solve that particular problem, and we take advice or the feedback from them itself. Once that is done, we abolish that one. All 5 group report to directly to the BCBS chairman and part of the permanent structure. Yes, 1 in 3 means option A should be right answer for this. Task forces are established for the specific आपका task, not आपका are temporary and not permanent things, you know, right? Next one, guys. So regarding the international cooperation and banking supervision and the systemic risk regulation. So when it comes to 1975, Concordat primarily aimed to allocate supervisory responsibility between home and host authorities for the foreign establishment of bank. Minimum standards of 1992 were designed as binding rule for all BCBS member nation, ensuring mandatory legal compliances. No. So when it comes to these BCBS guidelines, we do not have any sort of binding or आपका mandatory things, right? The BCBS guidelines are usually kind of suggestion as per the world economic conditions आपका, right? It is eventually how you interpret those. Like we have CAR as per BCBS, even third also we are maintaining at 8%. But when it comes to this particular one, we are maintaining at 9% when it comes to India. So every regulator, they can modify according to their requirements. Core principle of for effective banking supervision, first established in 1997, evolved आपका from 25 to your 25 to 29 principle, reflecting broader supervisory power and early intervention norms. 1 in 3. 1 in 3 means again A will be right answer for this particular. 1992 minimum standard were not legally binding rules, but guidance encouraging the endorsement and implementation of supervisory authorities and others, right? Next one, guys. Munisami sir, we will be starting आपका. You done with your JIB, na? You didn't message me, huh? I guess you were preparing for JIB things, huh? You done with JIB exam? this term only. So when it comes to your आपका 1996 amendments, this get asked many times, so please do remember this. It was all about the inclusion of your market risk, right? So 1996 amendment, which is to 1988 accords, introduced the capital requirement for market risk application, which become applicable from 1998. Bank using internal model for the market risk must compute VAR at 99 percentile, right? Two tailors आपका confidence level in 10-day horizon, that is fine. But it is at 99 basis. The next one is bank using proprietary VAR model must hold capital equal to the higher of previous day or आपका 3 time average of 60 business cycle, that is also true. It should be or, but the statement is fine, right? So 1 in 3 means आपका option A again will be right answer for this particular one. Correct guys? Yes. ठीक है. So option it is at आपका 99 percentile. The confidence level आपका which is required, which is 1999. Okay, you message me. Sorry, हाँ, I missed them. Okay, चलो now हाँ we will be doing classes आपका just after your आपका just after this CIB session, हाँ, most probably from the 1st July onwards we will be doing. ठीक है, after this CIB exam I'll take a holiday for 7 days, हाँ, because from last 2 months I'm continuously taking session morning and in the evening. So just after this I'll go somewhere else for next 7-8 days. Then I'll see you from 1st July onwards. So when it comes to this, the correct reflect the reason आपका Basel Accord wants and the objective of Basel 2. So Basel 1 apply uniformly 100% risk weight to all corporate exposures and others. To all corporate exposures regardless of the credit ratings. Basel 1 encourages bank to prefer high risk asset due to identical capital requirement across the different risk profile. This should be wrong. Basel 1 आपका encourage bank to prefer high risk asset due to, okay, anyone who want to comment, actually I'm not sure about this statement. It is actually guidelines related to one. Basel 1 effectively incorporated operational risk, especially those arising from the technological advancement in this. No, operational risk was not part of this one, right? So means when it comes to आपका these two means आपका means the statement 2 should be right here. 1 and 2 means C should be right answer. We'll check this one. Subhash sir, 1 month's holiday. Who will give you 1 month holiday? Uniform capital requirement led bank to higher risk for the better return. That is true. It did not recognize operational. That is also true. And assign 100% आपका, this is also true. ठीक है? So that means that's why the C is the right answer for this one. Next one, guys. Just pass the exam, then we will go somewhere आपका hills. या पहाड़ों में जाएंगे बढ़िया से एकदम for next 10 days, 7 days, and we will cut out from the world. Then we will get some energy and we will restart things आपका with full energy. So which of the following statement about the Basel 3 framework and implementation are correct? So what will be your correct answer? The Basel 3 framework introduced the capital conversion buffers and restrict payout if breaches to ensure the minimum capital adequacy, right? So this is like if you are won't be able to maintain this, so what we do, we bank RBI or regulator put some sort of restrictions, including issuance of dividends or आपका the salary cut and others for the directors and all. The liquidity LCR require bank to hold high quality liquid asset आपका in a time span of 30 days. This is wrong. It was started from 15, that is true. The counter-cyclical buffer is designed to limit participation during the system-wide आपका credit booms to reduce the losses आपका during the burst. 1 in 3 means आपका option A will be right answer for this particular one, right? Next one, guys. Subhash sir, how I'll arrange this tour, batao. Yeah. I do not have any property also, so I can sell that and I can arrange that one. Huh? Then you have to ask your bank to funding. ठीक है? We have to ask for the funding. Then your bank need to fund आपका for that tour and others. Huh? Then we can do it. ABC Bank, a scheduled commercial bank in India, is preparing fully comply Basel III capital regulations mandated by RBI. The bank has following the standardized approach for the capital risk and basic risk indicators, and recently considering adopting आपका advanced IRB approach for the credit risk, but has not yet received RBI approvals. The bank also maintain capital buffer as per the guidelines. So which of the following ABC Basel 3 requirements are correct? The first one is your ABC bank can simultaneously apply AIRB of the capital. No, RBI approvals is not there, so they can't, right? Should be wrong. The CCB was fully implemented in 2021 despite the COVID one, right? So CCB was also like, CCB is during the COVID, RBI provided some sort of relaxation around this, and the bank must comply the minimum capital to risk weight assets CRAR requirement on both standard and consolidated side. Yes, only three आपका, only three means option B should be right answer for this one. So आपका 21-23 COVID-19 so fully implemented was आपका again in 2021. So this is during the COVID relaxation and others, which was the case on this one, right? Next one, guys. Next one. Answer, answer, answer. Everyone, guys. Why other people are not answering? Still in bank. That's why I kept these basic label questions so you can start interacting. You can start answering. Now, like after few question, the multiple 5 statement, 7 statement question will come. For every topic, I have kept these warm-up questions so that you can prepare and you can answer. You can build that habit itself, right? So when it comes to the upper composition and regulatory requirement of bank capital under the Basel III and RBI guidelines. So the minimum capital to risk weight asset that scheduled commercial bank must maintain at 9%, excluding the CCB, right? The CET1 आपका ठीक है, CET1 almost sorry, capital must be 5.5% of risk weight asset, including credit, market, and this again true. The tier 2 capital can contribute maximum 2% toward the आपका 9%. This is also correct. All are correct. All are correct means option D will be right answer for this particular one. D will be right answer for this one. The chart which I have shown you recently, right? Next one, guys. Quickly. Vigneshwaran sir also joined. Very good, sir. Chalo. Now next one. Which of the following statement about RBI capital charge for credit risk under the standardized and IRB approach are correct? So under standardized approach, bank assign a risk weight based on the rating for the RBI eligible external credit rating agencies. For this one, true hai. The RBI approve domestic credit rating agencies include आपका CARE, CRISIL, ICRA, and India Rating Equate, Informatics, and this. This is also true, right? The next one, apart from this, also we have three others. The it is mentioned include, so this should be true, right? Next one is IRB approach allow bank to use internal assessment of the probability of loss given data exposure maturity to calculate the requirement. Yes, all are correct. So option D will be right answer for this particular one also, right? Next one, guys. Credit risk mitigation techniques आपका as per the RBI Basel 3 guidelines. So credit risk mitigation benefit are allowed to be calculated at portfolio level to enhance the operational flexibility of bank. Oh no, this should be at आपका transaction level, right? At the transaction level, this should be wrong. We'll cross check this. If the collateral has material positive correlation with the credit quality of the counterparty, it become ineligible for the credit risk mitigation. If the collateral material आपका positive correlation, हाँ, this is true, ठीक है. So that means only two. Only two means आपका option B should be right answer for this one. So statement one, credit risk mitigation is allowed only on the account to account basis आपका, even with regulatory retail portfolios and others, right? So that is the case in this one. Next one, guys, next one. Which of the following statement regarding the pillar 3 market discipline under the Basel 3 framework are correct? सुहास सर बताइए फिर कैसे होगा टूर आपका. We will do आपका then आपका the meetups, huh? And the companies they used to do this meetup, they invest more money on the event and advertisement. For that one we have to arrange funds, so we will be taking loan from every bank, huh? I have people from every bank, so you have to manipulate your documentation then, right? So आपका pillar 3 complement pillar 1 and pillar 2 by establishing the mandatory disclosure norms amid आपका strengthening the market discipline. When it comes to disclosure under the pillar 3 must only by the top consolidated banks. Standalone, no, it is for all basically. Certain disclosure like capital adequacy, journal, credit risk, standardized approach portfolio must be published quarterly if the financial statement are unaudited. 1 and 3 means आपका option A is the right answer for this particular one, right? Next one, guys. So CCCB countercyclical capital buffers aim to capital buffer in good time and to maintain the credit flow during the downtime and restrict आपका indiscriminate lending during the excess credit growth, which we generally or especially that Lehman Brother Bank they did during that particular period. The second one is CCCB can be maintained using the bank capital tier 2 and tier 3. Tier 3 is now got awareness and it is linked with tier 1 only. Credit to GDP gap is a primary indicator attracting this particular one, and the threshold is 3%. This is also correct, right? So option 1 and 3 means again option A should be right answer for this particular one. Next one, guys. So regarding the regulation of banking industry and systematic risk. So the primary reason for regulation of bank to ensure profit maximization and freedom from the risk taking by the financial. This statement we have gone through, yeah? Yes, I guess. Regulation guided by bank is developing the methodologies for the mechanism of risk. A core goal of the regulation impose capital requirement aligned with the risk profile आपका. This is two. Systemic risk arise primarily from the isolated. No, systemic risk is basically that global financial crisis, failure of one bank which lead to failure of multiple bank आपका, right? That is systemic risk आपका, right? So bank one major challenge for the regulators is in managing the contagion effect that can lead to system-wide failures in the banking system, right? Contagion effect is basically when that risk spread from one bank to others आपका throughout the economy, that is your contagion effect. 235. 235 means option C should be right answer for this particular one. Correct, guys? Okay, this type of question I was talking, right? Do not get scared with the statement. Very easy one. So a mid-sized Indian bank, Trinity Bank, has expanded the rapidly and deregulation after the deregulation and now have substantial international exposure. By 1991, bank credit folio, which include आपका 1,000 crores in government securities, we have 600 crores in interbank lending, top rated domestic bank. 900 crores is unsecured retail loan. 300 crores in आपका mortgage backed housing loan. 400 crores in irrespective performance guarantee issued on behalf of the client. Bank maintain the capital of 220 paid up equity capital and disclosed reserve, general loan loss reserve, and आपका 30 crores in subordinated debt, which is your T2. Now first one is bank risk weight asset must be calculated applying the 0, 20, 50 and 100 depending on the nature of the expenditure on this. Like let's say government it is 0, interbank it is 20, unsecured retail loan it is 50, or corporate loan and others it is 100%. So this is the one which we use for this one. Irrevocable performance guarantee are off balance sheet items and that must be converted to credit equivalents using the appropriate credit conversion factors before calculating the risk weight asset. This is also correct. Subordinated debt are qualified for tier 1. Now they comes under the tier 2 only, right? So it is आपका tier 2, or as per Basel 1 it was tier 3. As per Basel 1 it is आपका tier 3. No, I guess it is in Basel 1. Basel 1 also it was tier 2 only, right? So tier 2, and right now also they are part of the tier 2. Tier 2 capital include general loss observing provisions and certain hybrid instruments subject to the limit also, right? The correct है. As per the Basel 1, minimum capital risk weight asset ratio is 8%. In India, आपका we maintain 9%. 1245. 1245 means option A only will be right answer for this particular one. Okay. So option A only is the right answer. Okay. There was some questions was आपका hidden. So just a minute. I'll zoom it out. No, I guess the previous one is fine. So 1996 amendment, this is bit important. So please do take care around this. Huh? So 1996 आपका 1998 introduced capital requirement for the market risk applicable from this one, true है. बैंक यूजिंग आपका 99 परसेंटाइल, दिस इज आपका रॉन्ग। वार इज आपका इक्वल टू हायर प्रीवियस डे और 3 टाइम एवरेज ऑफ लास्ट 60 बिजनेस डे। The Basel Committee on Banking Supervision has a legal authority to enforce its standard across all the member jurisdiction. No, it is not a legal one, right? Third one is the amendment allow tier 3 capital to subordinated debt with lock-in to meet the capital requirement for market. 135. 135 means option A, sorry. Option A will be right answer for this particular one itself, right? This is easy, I guess. Next one, guys. So, आपका Basel 3 framework and implementations are correct. Basel 3 framework introduced capital conversion buffers that restrict payout if the breaches to ensure the minimum equity. The next one is आपका LCR required to be hold at high quality liquid asset 30 days. There are some statements which are repeated, I guess. Counter-cyclical buffer is designed to limit participation during the system-wide credit booms to reduce the losses during the burst. NSFR become the minimum capital standard effective from 2018 to maintain the stable long-term funding sources. Leverage ratio under the Basel 3 consider risk weight asset and off balance sheet exposure for the calculation. रिस्क वेट आपका, ठीक है। Leverage ratio under the Basel 3 consider the bank weighted asset and it include आपका basically directly on off balance sheet and this. Okay, what you guys suggesting है option C. Option C means आपका this. Fifth statement should be wrong. Yes, the leverage ratio calculated regardless of risk weight based on total asset and off balance sheet exposure. Very good, guys. So option C is the right answer for this particular one. Done. Next one. So, which of the following statement about the composition and regulatory requirement under Basel 3 RBI guidelines? So, minimum आपका risk weight assets 9%. It is mentioned RBI guidelines, so 9%. CET1 आपका 5.5%. That is also true. Third one is आपका tier 2 capital contribute 2% of CRAR required under the requirement of 9%. Additional tier 1 capital allow 1.5% of minimum, this within the required of 7%. CCB 2.5% of risk weight assets separately, but it is आपका T1 only, right? So 1 2 3 4 1 2 3 4 means option C must will be right answer for this particular one. I have kept one another set of question around the areas. So now we will be entering into the third shift, third आपका set 299. Where it gone? Okay, let's go for this. Option C, guys, for the previous one आपका. ठीक है सुभाष सर. So ABC Bank is a scheduled commercial bank operating in India. Based on this, so आपका they have common equity tier 1 which is 6%, above आपका 5.5%, additional 1.5 above 1.8, tier 2 capital is 2%. So this is the one, right? So now when it comes to this particular question, your areas आपका here. So what things which generally comes, the bank has not yet आपका factored in any additional capital requirements maybe prescribed under the pillar 2. So following statement are correct. Voice is low क्या? आपका Sarabjit sir, voice is low क्या? For me it is fine. Can you please check your device? I guess you mentioned some comment also na. So I have checked with the OBS thing, आपका streaming thing, but it is fine for me. In my device on YouTube also, the voice is fine. So can you please check once, guys? Once, sir. So now, ABC Bank meet the minimum CET1 requirements under the pillar 1, but does not fully meet the CET1 requirements including the CCB. So including CCB, it will be what? CCB is not given in this case. Kya? So like CET1 plus CCB, it should be 8%, but it is आपका should be this आपका, right? So requirement 8%, but CCB is not mentioned in this case. What you guys suggesting? The second one is आपका bank, the bank tier 1 capital ratio is non-compliant because tier 1 capital cannot exceed 1.5% of risk weight asset of this particular one. This is आपका wrong, right? So that is the minimum one. The excess of T81 additional tier 1 capital over the minimum tier 1 capital requirement can be considered for the meeting of minimum CRAR provided CET and tier 1 minimum ratio are met in this particular case, right? So it is 5 above than that, and this is also above than that. So the bank meet minimum CRAR of 9%, but does not meet the total requirements including the CCB. CCB is not given, I guess that's why it is using. CCB is mentioned somewhere, then otherwise it is fine. RBI may require ABC Bank to maintain capital above the minimum regulatory ratio under the Pillar 2 due to weakness in the risk management process. This can be done. The next one is Tier 2 capital of classified going concern capital to absorb losses. No, this is आपका Tier 1 team. So this is आपका Tier 1, not Tier 2. Even if Pillar 1 capital ratio are compiled with, bank are expected to operate आपका above the minimum capital requirement and on ongoing basis. This is also correct, right? So what you guys suggesting? Durgesh sir is saying option A. Means आपका like these two statement also should when it comes, okay, we'll check the answer because CCB is not mentioned anywhere, right? I cannot see the CCB things. The first one, CET1 6% exceed with the minimum CET 0.5%, but for the आपका CET1 plus for this particular requirement. अच्छा, okay, what it is saying कि basically the 6% plus if we add आपका 2.5, so it will become 8%, 8.5 आपका. So this is the challenge which we will be facing. The second one आपका 1.5% to be continued with tier 1, but it does not make tier 1 ratio non-compliant. The incorrect statement next one is आपका tier 2 is going concern absorbing losses only at the liquidation आपका, right. So that is the another one for this particular one. Okay guys, next one. Now let's practice some numericals around this particular one. Okay, first one theoretical question from this series, then we'll go for the numericals. Okay, this is also kind of numerical only. Can you see the option? Okay, just tell me the right statement here, because if I'll minimize this particular one, the text will be very small, right? So better कि I'll हाँ option नहीं दिख रहा है, I know, but if I'll minimize ना, the option will go आपका below than that, right? So now you can see the text itself clearly. So see, let's solve this particular one together. No worries. So when it comes to your question itself, so here we have growing a branch operational this during the financial year, the bank gross income figure are these, right? Bank has recently faced losses due to system failures, penalties imposed by regulator for non-compliance with KYC. ABC currently follow BIA, that is basic indicator approach, computing the capital charge for operational risk as prescribed by the new capital adequacy framework. So now, based on the above, it is governing the operational risk. Consider the statement. The first statement is organization. So operational risk include losses arising from failed internal process, people, external events, and legal, but exclude the strategic, and this, as per PCB, is true है. Under the basic indicator approach, year with negative upper gross income are excluded from the numerator and denominator. This is also true. As per the bank, the capital charge for the operational risk under BIA will be computed applying the average gross income of all 3 financial year. No. So when it comes to this one, we will be using this plus this, means 220 plus 180 divided by 2. The third statement should be wrong here. The value of alpha under the basic indicator approach is 15%. That is true. The next one is your gross income for the BIA computation is calculated net operating expense and from provision made during the year. No, it is related to gross, so provision and operating expenses will be excluded from this particular, especially this provision right. Then next one, it is when it comes to this particular one, so B will be gross income as not net income, gross operating income, and excluding this provision things. Income arising from the legal settlement in favor of the bank excluded while computing the gross income for the operational capital charge. This is also true. If the Reserve Bank find that capital charge computed under the BIA credibility compared with the peer bank, it may initiate supervisory action under the pillar 2. That should be correct, right? So 12467. 12467 means option A only is the right answer, which is at the top, right? So option A only, which is the correct answer for this particular one. Done, guys. Okay, one more question, theoretical part. That is supervisory review process SRP. Sorry, SRP under the capital adequacy framework, pillar 2. Sarabjit sir, now it is fine kya? Have you checked at your end? So under pillar 2, bank are required to assess only those risks that are fully captured under the minimum capital requirement prescribed under this one. No, pillar 2 is basically, apart from that, it is beyond than that also, right? So it should be wrong. It should be wrong, sorry, not right. The next one, ICAAP, आपका is a board approved internal process through which a bank assesses its capital adequacy in relation to the overall risk profile and future business strategy. This is true. One of the objective of SRP is to encourage bank to develop improved risk management techniques beyond the regulatory compliances. True. Risks such as liquidity risk, reputational risk, strategic risk are example which are not adequately captured under this particular one. True. The supervisory review and evaluation process is conducted by bank to internally validate this one. No, it is आपका by the supervisors. Supervisors under pillar 2 have authority to require bank to hold capital in excess of the minimum requirements. The last one is early supervisory intervention principle 4 under our pillar 2, aimed at preventing bank capital falling from below the required level in this. True. So 2, 3, 4, 6, 7. 2, 3, 2, 3, 4, 6, 7 means option C will be right answer for this particular. C will be right answer for this, guys, right? So C is the correct answer for this one. Next one. Okay, one question around ICAAP. This also get asked many times. Huh? ICAAP, Internal Capital Adequacy Assessment Process, and you have to find out the correct one. So, a sound risk management system require active oversight by the board and senior management, appropriate policies and limit, comprehensive risk monitoring, effective MIS and robust internal control. आपका ICAAP must undergo regular independent reviews separate from RBI SREP, ठीक है, that pillar 2, to ensure आपका proportionate to the bank nature, scale, complexity, including verification of assessment process and stress testing. Bank with complex operation are mandated by RBI to use sophisticated economic model for this, and adoption is compulsory. No, this is not a compulsion. आपका ठीक है. It is, there is no mandate as such. The an ICAP should be forward looking, risk based, include stress testing, scenario analysis, and all. A bank using capital model must document the model specifications, assumptions, historical data, independent validation, stress testing, confidence level, ensure adequate things and all true hai, right? So means 1, 2, 4, 5. 1, 2, 4, 5 means option B will be right answer for this, right? So RBI does not mandate the use of complex economic model. It is only with the presence may adopt the volume that is basically decided by the bank itself, right? Okay, one more question आपका around the SRP. Consider the following statement regarding the RBS, risk-based supervision, sorry, not SRP. So primary objective of risk-based supervision is to protect depositor interest and financial stability is the secondary concern. As such, we do not have any segregation, right? It is usually for both, right? Under the RBS, the intensity of one side examination depend on the level of risk and probable impact of bank failures rather than the volume business आपका. The supervisory ratings under RBS are disclosed publicly to ensure the market transparency. Ratings are not published publicly मतलब for by bank. Stress testing and reserve stress testing are the integral part of this one to assess the capital adequacy of the bank. Governance assessment under the RBS include evaluating the competence, strategies, internal control, and risk management conflicting this. Yes. So 245 means again option C should be right answer for this particular one. So RBS aim both आपका to protect depositor interest as well as promote financial stability. Supervisory rating are confidential and shared only with the concerned bank. Right? Next one. Okay. This should be right. 100% correct from all, huh? Because recently we discussed this one. So a bank report आपका following figures. CET1 which is 7,800 crores. Additional CET 1,700 crores means आपका the joint is T1. Tier 1 capital. Tier 2 capital is 2,300 crore. Risk weight asset आपका we have credit risk 58,000 crores. Market risk आपका 8,000 crores. Operational risk is this. So based on this, you have to calculate the areas and you have to find out which of the following statement is incorrect आपका, right? So what will be your correct answer? So if you have to calculate the CET1, so CET1 capital is basically your आपका capital means tier 1 plus CET1 is equal to your tier 1 plus tier 1 plus tier 2 divide by risk weight asset means equal to आपका 7,800 plus this it will be your tier 1. What we have to find out, sorry, it is आपका CET1, CET1 sorry, not tier 1. So it is आपका CET1, this आपका means CET1 capital, CET1 capital divided by risk weight asset means 7,800 crores divided by आपका risk weight asset 58,000 plus 9,500 आपका plus your 12,500. So that is your answer into 100. That is the answer for this one. So basically how we will calculate this one, 7 it is total up 7,800 crores and the total of the total risk weight asset we have 58,000 plus 9,500 plus 12,500, so it is equal to 80,000 crore, right? So 80,000 crores आपका we have this. So now 7,800 divided by 80,000 into 100, so it is equal to 9.75. The first one, the CET1 should be your 9.75 percentage. This is your CET1. It is mentioned आपका 10.60 means this is wrong. आपका when it comes to tier 1 capital, so tier 1 capital is basically your this, the combination of both. So 7,800 plus आपका 1,700 divide by 80,000 into 100, so it is equal to 11.87. so this should be how much? 11.87%, and it is up 87 or 88, you can say 88 आपका, right? So this is also wrong. थर्ड वन आपका टोटल CRAR ऑफ द बैंक, तो टोटल CRAR इज इक्वल टू 7,800 प्लस आपका टीयर वन प्लस टीयर टू कैपिटल 1,700 प्लस 2,300 आपका, सो इट इज इक्वल टू टोटल आपका कैपिटल, दैट इज total of all these 11,800 crores divide by 20,000 into 100, so it is equal to 59. I'm doing 59% or something, it is what it is coming 59, or I'm doing some mistake here guys. No, I guess I have done some wrong calculation. 7,800 plus 1,700 plus 2,300, so it is 11,800 divided by आपका divide by 80,000, no, into 100, so it is coming 14.74, ठीक है, it is coming आपका 14.75%, right, not आपका 20, so this is the, so these are the areas which are generally part of this, means all the ratios which are given here are wrong, means आपका B is the right answer for this one. Okay, yes, 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 now it is fine now everyone. So any question around this? So one question you can expect around this particular one, so please do take care around this one, easy one. Basically this wala portion is more important, huh? What we have discussed earlier also, so do remember these areas or the ratios and all, so that will help you in this particular case, right? Next one. Suppose a bank following exposure capital on balance sheet credit आपका 1,000, off balance sheet after applying the CCF 200 crores, risk weight asset is 100%. We have आपका tier 1 capital 100 crore, tier 2 capital आपका 200 crore. तो risk weight asset first you have to calculate the risk weight asset आपका 100% है, तो it is 1,200 crore, so it is equal to 1,200 crores. Then when it comes to your total capital, it is आपका 150 crores, total tier 1 plus tier 2. CRAR is now 1,200 divided by आपका 150 divided by 1,200 into 100 is equal to 12.50. It is आपका 12.50%, right? So this is the areas which are generally part of this particular one. So simply just do remember those formulas and all, and that will help you in this case. So a bank has following exposure, the total risk weight asset of the bank. So housing loan to individual 40 crores, risk weight is 50%, means आपका 20 crores. आपका corporate loan 100%, means risk weight asset will be 25 crores. आपका this is 0. When it comes to 75%, तो 75% of this 22.50 crores, 22.50 crores, and आपका गवर्नमेंट सिक्योरिटी 0, तो द टोटल ऑफ दिस 22.5 प्लस 2045 is equal to 67.50 crores, right? That is the one, correct hai? So 67.50 crores for this particular one. One more, then we'll move forward to the new area. XYZ बैंक आपका tier 1 capital 500 crore, tier 2 250 crore, risk weight asset this, credit risk आपका 7,000 crore 100%, market and operational risk आपका it is your 1,750 crores आपका, right? So minimum CRAR is 8% and tier 1 minimum is 6% required. So what will be your correct answer for this one? CRAR means at the Basel you have to calculate. Divided by 8,750. So go to 5.7 or something. So CRAR, total capital divided by risk weight asset. So here we have, if it comes to total capital, it is 750 crores divided by risk weight asset. So risk weight asset is equal to 8,750 and आपका 8,750. So 750 divided by 8,750 200, so it is equal to 8 point, it is आपका coming around 8.57, right? So 8.57, right? And when it comes to for the tier 1, it is 500 is 500 divided by 8750 and 200 is equal to 5.71. It is 5.7, right? This is the correct है? This is the one, right? So आपका the both the areas which generally comes under this one. Okay. Next one, guys. So here, when it comes to this question, bank X आपका financial data for last 3 years. So now it is given आपका net profit. So when it comes to net profit is after exclusion of all the cost. But when it comes to your BIA, it is get calculated on gross profit. Okay? So we calculate BIA on gross profit, and the figure which is given us आपका, that is net profit. So what we have to calculate? You have to calculate the gross profit, right? The gross profit, which is equal to your 120 plus 15 plus आपका this minus excluded items आपका, right? So for first you have to calculate the gross profit for each line. आपका 120 and 180 160 120 180 85 and minus this 75 175. So for this line it will be 175 crores gross आपका gross profit. The for second line 150 plus 170 आपका 2 and 223 225 minus this, तो it is आपका 213, ठीक है, 213 minus 10, so it is आपका 8 68 minus 15 53, so this is आपका 53 हाँ 53. So this is gross income. Now we have gross income. Earlier, if you'll see the previous way, it was seems like ki 1 year we have negative, but that was net profit, right? So now we have gross profit, all आपका are in positive. 175 plus आपका 150 plus 175 plus 213 plus 53, so is equal to 441. So your gross income or gross profit is average 3 years 441 divided by 3. Okay, so divide by 3 is equal to, it is coming around 147, right? So 147 into 15%, 1.5 is equal to 22.05. So the BIA approach, so the risk weight asset is 22.05 for this particular one. Got it, guys? Yes or no? This is very basic one, huh? Very good, guys. So 22.05. So this is something how they can give you the question. So accordingly you have to read. This question we have solved earlier also. This also is a very simple one. Gross income आपका last 3 years means the total of these two, right? So 1300 divided by 2 into 15%. So outcome will be your answer for this one. 1300 divided by 2 into 18, 15%, 0.15, 97.50. This is something, or I'm doing some mistake here. 1300 to, it should be around this one, right? Yes. Now next one. Next one is your credit risk mitigation. So here we have to, when it comes to exposure after the haircut, this also get asked sometime. So you just have to remember this formula. Okay, though this question is given in the appendix portion of your book, but very simple one. Okay, so we have exposure, we have collateral, haircut on the exposure, haircut on the, this is haircut on exposure, this is haircut on collateral, right? So haircut for the currency mismatch, if it is aapka, that is the one, right? So this is something which will then, so basically you will be calculating the net exposure, so exposure minus adjusted collateral, then aapka capital will be risk weight asset into aapka CRAR, right? So now if we solve aapka one question around this, how you'll solve this one? So haircut method, basically the basic one, adjusted collateral value and unsecured portion. So when it comes to this one, 10% of 80%, 80 lakh aapka, which is 72 lakh, right? 10 that is aapka 28 lakh, na? 28, 70, sorry, 80 into 0.10, aapka 70, basically it was 81 into 80 into 10 is equal to minus 72. So it is coming aapka 72 only. Yes. So the difference aapka 72 is, and this is 28. So basically collateral value is 72 lakh and the unsecured portion is 28 lakh, right? That is the correct now. So this will be the areas for this particular one. So now this one, solve this one, guys. Comprehensive approach, where you are using aapka that same formula. For what was the formula? Exposure is equal to your exposure at first, if it comes to haircut, yeah. So it is exposure 1 plus exposure on haircut. The another one is, the another one we have when it comes to minus your collaterals. So 1 minus exposure on collateral, right? So that is the one. So this is the formula. If forex aapka fx. So when it comes to adjusted exposure, it is equal to what is aapka this 200 lakh 1 plus the haircut on exposure is how much? 5%. So 1 plus 0.005. If you solve this equation, the for the another case, this is your exposure, haircut on exposure. When it comes to collateral, it is aapka 150. 1 minus exposure on haircut is 10%, 0.10. That is the outcome for this one. So if I solve the first one, 210 aapka, ठीक है? And for the second one, 75 aapka, right? 75 lakh. Now the difference is aapka, right? Minus 75 is equal to 135. No, I have done some wrong calculation here. Adjusted one is 150. Sorry. Not 70. It should not be 70 now. I have done some mistake here, I guess. It is 150. 150 आपका minus 135. It is coming आपका 135, right? It is coming 135. So now 210 minus 135 is equal to 75. So adjusted exposure is 75 lakh. This is the, okay. Yes, 75 lakh will be the correct one for this particular one. Next one, okay, one more. Answer is not given, okay? Okay, it was below than this question. Just a minute, I'll fix this one first. Next one. So exposure is 300 lakh, and for government security collateral 120, corporate bond आपका 100. तो multiple collateral adjustment, government security it is 2%, and आपका corporate bonds it is आपका 12%. Exposure 300, government security 120 minus 1 minus 0.02. 117 for it is आपका, it is coming after this 117 आपका 117.6. So this is आपका, if I for the corporate bonds 12%, 88 आपका, this is coming 88 lakh. Now if I do the calculation, 117.6 plus 88, 117.6 plus 88, 205.6. So adjusted collateral, so it is 205.6 आपका. They have asked only आपका adjusted collateral. हाँ, this is, the question is not about the other, so it is only about the adjusted collateral, guys, right? So adjusted collateral, earlier it was आपका, this was the value, means 220. After this haircut it came down to आपका 205. So this is your answer. If you go for the like the requirement, so it is 300 minus आपका this, that is the one what you have calculated, right? Durgesh sir and Shreyan sir, they are asking for the adjusted this one, right? So it is not आपका net adjusted exposure. If they'll ask net adjusted exposure, then you will be आपका net adjusted exposure is equal to 300 minus 205.6, which is equal to 94.40, right? So this is आपका net exposure. So this is adjusted collateral, so that's why this is the one. Done, guys. Now vertical allowances, let's go for the vertical allowances. So this rule of minimum which you have to which you have to use, minimum rule आपका, right? And you have to apply your vertical allowances by what percent? 5%. So when it comes to what we have asked in this particular question, match position, which is your 100 out, this is your long position, this is your, let's say it is आपका 1 year, both आपका 1 year long position, short position, long position 120 this, तो match is the minimum of both, तो it is आपका 100 lakh, the minimum of both. Vertical allowances 100 lakh का आपका 5%, ठीक है, so which is equal to 5 lakh. Then आपका net open position, so when it comes to the net open position, the differences between these two, आपका long and short, which is your 20 lakh आपका, right? So that is the one which will be the right answer for this particular one. Next one, guys. So next one, a bank has the interest rate position. So securities and derivative. Okay, these are the securities, these two derivative. So okay, sorry. Securities and derivative. Time zone is आपका 2 years. This is 2 years, right? So in same time zone आपका you have to, and in the another one, right? So when it comes to the first case, So we have two time band. One is 6 month. So in 6 month आपका we will be the match position which we will be taking. 6 month आपका 90, 6 month 40. So we will be taking आपका 40 the short position, sell position of 40. In 2 years आपका we will be taking 2 years आपका 180, 140. So we will be taking आपका 140, right? So sell position of 140. Rani ma'am become pro, I guess, huh? Very fast, huh? So when it comes to this particular one, आपका if I go for this 40, आपका 41, right? So 40 lakhs, and we have a vertical of how much? 40 lakh का 5%, and then आपका for this one 140 lakh का 5%, right? 140 lakh का 5%. So it is how much? 40 का 5 is equal to 2 crores, and 140 into it is 7 crore. Yes, बिल्कुल correct है, ठीक है. So the vertical disallowances will be how much? 9 crore. That will be answer for this particular question. Correct है? Yes, everyone. So this is आपका vertical allowances in this particular case. How? See, two question back to back. One was around this, your vertical allowances basic. The another one, how you will actually see in the examination something like this. Another one is horizontal allowance disallowances with zone आपका, ठीक है. So we have zone 2. Zone 2 means 30%. They'll not mention this one, huh? So you have to remember that one. So zone 2, so we have one long position, both security belongs to zone 2, right? That means आपका disallowances will be 30%. Means आपका 150 करोड़ का 30%, 150 lakh का 150 lakh into 30%, 155 3 से 150 into 0.3 is equal to 45, right? So this is आपका 45 lakh will be the right answer for this particular. So vertical up, we have same time bond 6 in this. So this is your 250 at the rate of what we have to find out in this case, total disallowance. So 250 into आपका something wrong with this question क्या? After the vertical adjustment, it is आपका 50 and it is आपका 40. Zone 1, Zone 2, 40 and this. Just a minute, I'll check the answer only. So match position 250, that is fine. 250 का 10%, 25, and आपका residual long is 300, 250. No. First of all, this should be आपका 5%, right? And here up the horizontal match, it is horizontal disallowances 40%. 40 का 40%, this is fine. Then we have total आपका this. So this should be calculated at आपका, I guess, 25 and 16. 25 and 16. Why you calculated 10% आपका, Rani ma'am? अच्छा, okay. But it is आपका rate is sorry. Rate is given for this one. So it is 10%. Usually it is आपका. Usually it is your usually it is 5%, if rate is not आपका specifically mentioned. The another one is it is in between two zone आपका. So in between two zone means it is 40%. So 40 का 40%, 40 का 40%, that is the one. Correct है बिल्कुल correct है मैम. So this is आपका the area itself, right? Done है. चलो, now the next one is sometime. Okay, I forgot the creation of question. So DSIP wala case na, Suhas sir or somebody asked in the morning. So how they'll ask you DSIP question आपका? So DSIP bank bucket 2 आपका, right? So means we have 5.5 आपका plus 0.40, right? So this is the additional surcharge. It is mentioned here, but it will not mention in your examination. So calculate CET1 आपका capital requirement. So it is their risk weight asset is 5 lakh into आपका 0.40. So this is आपका mention here. So they have to maintain this additional आपका in their CET1, right? So this is something what generally comes under this low volume. Anyone else also facing this same issue here? So Vasir, you got this one morning. Actually, you asked this particular question. So minimum CET1 requirement, आपका सब 5.5 conversion is this. DSIP surcharge is this. So that is the overall CET requirement will be this particular. So if they are asking you to calculate, the calculation will be based on the numbers. Like let's say they'll give you the bucket like let's say if it is bucket आपका 4 or if they mention आपका SBI name, so it is 0.80. So 0.80 of the risk weight asset they have to maintain additional, right? Got it, guys? Raghav sir is facing some volume issue. Anyone else is also facing the same one? So we done with unit 30. And now means you have, it took 2 hours आपका to complete this topic, even for the revision also. Why other people are not answering? Anyone else facing the voice issue? For me, it is fine. Raghav sir, can you check from your end? Okay, so now we have your market risk. So next topic is related to market risk आपका, right? So market risk, market risk when it comes to the market risk area. So we have market risk आपका basic concept. Then we have market risk management. We have structure, आपका identification, measurement, risk reporting, आपका this, ठीक है? तो in the morning itself we have discussed all these particular concept. So as we have to complete this module, ठीक है? So please do refer those morning session, they are equally important, right? So we will be हाँ बिल्कुल 100% we will be skipping that particular one, otherwise it will go 1 p.m, right? 1 a.m. So the first one, market risk आपका, please go through that part once and twice. That will help you. Like, do not only rely on this one. So that's why we are doing that additional session in the morning. So do follow that one. And आपका now we will be entering into practice. Before that, we will be taking a break for 5 minutes. Huh? Just allow me 5 minutes आपका, right? So then I have to take some meditation. So just after 5 minutes आपका, we will be starting with the your market risk in the areas itself, right? So 5 minutes, guys, then we will continue. And this today's session will go till around 9 after 12 o'clock. We have to finish module B anyhow. So please be prepared accordingly. Simultaneously, you guys can do your dinner and others, right? Chalo, see you in 5 minutes, guys. Thank you. Okay, guys. So shall we start? So market risk आपका, which is something related to your trading book, right? So any adverse movement in trading book will generally affect the overall आपका portfolios which we have, right? Organization structure is same again. We have ELCO, and which is the primary committee which generally manage this particular one. Now let's start with the question. So let's start the discussion with the question. Okay, first question, guys. So which of the following statement correct regarding the market risk management framework? So market risk आपका, when it comes to the market risk, so market risk management process are primarily designed to enable risk pricing of the financial instruments. Market risk management process are primarily designed to enable, it is, it should be wrong, right? Pricing risk, the market risk management process are primarily designed to enable the risk pricing is actually not part of the one. You remember that process? We have identification, then we have measurement, then we have monitoring and control, and we have आपका mitigation, right? So these are pricing is not part of this particular one. An effective market risk management framework include identification, limit setting, monitoring, control, and this आपका true है. The next one, financial instruments are subject to market risk because their value depend on the market variables. 2 and 3 should be right answer for this one, right? Next one, guys. A, which of the following statement regarding the organizational structure for market risk management in bank are correct? So ALM support group is primarily responsible for product pricing and protecting it should be ALCO. This is the responsibility of ALCO. Wrong here. The risk management committee is responsible for setting the prudential limit, and this is true. The middle office operate under the direct control of the treasury. No, they are independent. This is also wrong. Okay, just a minute. Huh? I have to reconnect the system. Just not D, not C. Okay. A1 आपका no. C. Option B should be right answer for this one, guys. Right? Why option B? Because ALM is not. ALCO is responsible for these things. And middle management operate direct control of treasury. No. So this is आपका, that is also wrong. So B, indirect आपका, incorrect, sorry. Product pricing and AL आपका protecting NIM is fall under the ALCO. When it comes to your this, the middle office operate independently of the treasury, right? So that's why option B is the right answer for this particular one. Next one, guys. So, which of the following statement, principle of risk identification and market risk management, so standard product operate within the product program that outline the procedural limit in this, true है. Non-standard, the new product आपका may temporarily operate under the product transition memorandum until the full program is developed. Third one is risk-taking decision at the transaction level are made independently of the corporate label to encourage. No, this should be wrong. 1 and 2. A should be correct answer for this particular one, right? So risk-taking at transaction level must align with the corporate guidelines, not the independent one, right? Next one. So correct statement with related to risk monitoring and control. Risk monitoring and control. So setting limit and triggers is a key part of the risk measurement and essential for controlling the market risk. All M2M taking activities must operate within any stop loss. Without stop loss, no. With the stop loss, आपका, this is wrong. Stress testing of the financial model should ideally done at least quarterly using the predefined charge assumptions and all. Yes, 1 and 3 means again option A will be right answer for this particular one. Correct, guys? Next one. Okay, answer this question. Easy one. So X invested आपका share of ABC Limited using capital of 10,000 borrowed fund and borrowed fund 9 time of the limit. Like eventual investment is now 1 lakh. So he invested 10,000 and take a leverage 9x. So it become आपका 1 lakh. Now total investment is 1 lakh. A subsequent fall in the share prices lead to losses, forcing the liquidation of the holding in an illiquid market. So now the assumptions. आपका a 5% fall in share price result proportionately higher percentage loss of the capital when leverage is used. Yes, a 5% fall will make a loss of आपका 5,000 in this particular case, which is earlier if it is आपका 5% of 10,000, but now with leverage it is 5% of this. So the need to liquidate position due to breach of permissible borrowing limit X to asset liquidity risk आपका, right? It can be a forced liquidation also. This is also true. Third one is market risk arise when the overall market condition deteriorate, cause difficulty in selling the security without sub prices. This is the one, again correct one. Leverage, in this leverage scenario, 10% fall in share price can completely erode the capital. Like if there will be a 10% decline, so 1 lakh ka 10% is equal to 10,000, which was the initially invested. That is also true. Price risk faced by the X exists only because of the borrower's funds, borrowed funds. No, it is आपका leverage fund also. So that is wrong. So 1, 2, 3, 4 means option A will be right answer for this. A will be right answer for this, guys. Okay? So option A will be right answer. The only incorrect one is आपका this. So that is something कि if you are taking the leverages, so that is the major reason, especially when it comes to the treasury areas and all. So like the areas is like if there is a adverse movement, you will be having or bank might face आपका huge losses in that case, right? So since standard product already have been analyzed, risk profile, non-standard product require a closer scrutiny and cannot rely solely on existing product risk assessment. And the risk-taking unit must operate within the approved product program and the procedures limit control this. A new non-standardized product may after temporarily run in this particular one. A deviation from the prescribed procedure or safeguard the transaction label not require corporate label, it does. So this is wrong. While the approving new product corporate label decision making must consider the risk written characteristics, qualification and impact of transaction label at the portfolio one. 1, 2, 3, 5. 1, 2, 3, 5 means option B will be right answer for this particular one. Easy one, I guess, right? Next one, guys. So, which of the following statement regarding the organizational structure for market risk management in bank are correct? Market risk management in bank are correct. So, ALM support group is primarily responsible for this statement we have gone through earlier also. So, ELCO is responsible for this one. Risk management committee is responsible for setting prudential limit. Yes. Mid office operate under the it is independent. These three lines are state exactly same. ELCO is responsible for articulating bank interest rate view and the managing the maturity. This is also true. Board of directors set aggregate limit and responsible for approving this. So 245. 245 means option A will be right answer for this particular one. Correct, guys? Next one. Which of the following statement correct related to downside risk, value at risk, and method of computing VAR itself? So we have three methods. One is your Monte Carlo, then simulation, historical simulation, and correlation. These are the three methods. So downside risk is preferred financial risk management because it consider both potential profit and losses. A 1 day VAR of 10 crore at आपका 99 percentile confidence level mean the daily loss will exceed 10 crore exactly since in every 100 days. It should be wrong, right? 99% of this. 10 crore M means exactly 10. No, it should be wrong, right? So first statement, downside potential, which take only losses. This is also wrong. Correlation method, VAR, is use of variance covariance matrix and relies assumption about the volatilities and the correlation across the different factors. Historical simulation method does not assume any model or correlation. It is based on the future behavior on historical pattern using weighted average and moving average. Monte Carlo simulation method is based on the generating thousand of randomness. Three, it should be 345. 345 means C should be right answer for this one. So downside potential, it ignore the आपका profit potential and 1 day VAR of 10 crores at 99 confidence level means 1 out of 100 days or आपका 2.5 time per years. The लॉस may exceed आपका 10 crores, not exactly आपका in every 100 days. So that is probabilistic, not आपका deterministic. Right. Rest all statements which are given here, they are correct आपका. Right. Next one, guys. Um, Risk management committee and the areas. Let's discuss. See things. Market risk measurement. Okay, just solve this. We have discussed this one also, I guess. So, correct regarding the market risk management framework. Market risk management present आपका designed to enable the risk pricing. Okay, we have solved this question now. We have solved this question. Sorry, guys. This is आपका pricing risk is not part of this, and effective of identification limit and this. We have solved this one. There are some repeat question. The second one. Risk monitoring and control mechanism. Setting limit and trigger is key part of the risk measurement and essential for the controlling market risk आपका. All M2M risk taking activities must operate within. Okay, this also we have solved, I guess, right? This is also a repeat question. क्या? Stress testing financial model should ideally be done आपका quarterly basis. Risk taking unit may आपका exceed approved limit during the intraday trading. No. Model used for the revaluation must be validated annually by the reputed external agencies and reviewed periodic. आपका assumption this is 135. 135 means option A will be right answer for this one. Next one. Okay, now next one we have credit risk. So when it comes to credit risk, again, we have a organization process, LRM, and we have credit control monitoring guidelines. We have some securitization, credit derivatives and others, which generally comes under this particular one, right? So basically, when it comes to the credit, आपका the credit risk. So these are the questions. Again, it start with the identification, then measurement, the another part आपका which include quantifying the risk. Then we have your control and monitoring. Then we have finally mitigation. Organization for credit risk management. This we have discussed, right? So the different type of risk, it is portfolio level at the transaction level. So we have to manage things at portfolio level as well as the transaction level. Approaches आपका IRB and your आपका standardized approach, the rating based approach in all, right? So LRM is the another tool. Then we have securitization, where we use different securities, and we have credit derivatives, CDS and CLN, TRS. These are generally part of this particular one, right? Now let's come to the practice portion itself. Here it's right. So first, which of the following statement regarding credit risk and its management by bank is correct? The credit risk arise only from the borrower fail to repay the loan or interest in term of loan structure. So apart from this also, counterparty risk, guarantee and others, they are also part of this. Non-fund based facilities like guarantee, letter of credit can also expose bank to credit risk. Tra- Treasury transactions and the cross-border exposure are example where credit risk can be materialized, especially when we are having some securities and counterparties defaulting. In that case, 2 and 3 should be right answer. B should be right answer for this particular one. So B will be right answer for this one. Next one. Regarding the organizational structure and credit risk management are correct. Okay. Organizational structure or the governance of the credit risk management. So credit risk management department is responsible for setting prudentials, limit and others. No, it is आपका CPC, credit CPC, or it is called Credit Risk Management Committee. The board of directors has a responsibility to define aggregate limit, review the mechanism and capital planning policies. The management committee, risk management committee, ensure processes align with the policy, set prudential limits and review आपका 2 and 3 means option B will be right answer for this particular one. Correct? Next one. So which of the following statement are correct in the context of credit risk control and monitoring? So we have credit risk control and monitoring mechanism should focus exclusively at the portfolio level. No, it is portfolio as well as transaction level. Transaction as well as portfolio level. Well-structured MIS and CIS is critical for this one. Escalation or early आपका warnings to or for the early remedial action. This is the primary tool. Active portfolio management help align with the bank credit strategy and changing dynamic in the economy. Again, 2 and 3 will be right answer for this particular one. Next one, guys. So bank must ensure that credit risk assessment and internal rating update are mandatorily synchronized with the regular credit renewal process for the consistency. Bank must ensure that credit risk assessment and internal rating update are mandatorily synchronized with the regular credit renewal process of the consistency. Okay. The credit approvals process above आपका specified limit must include an officer from the credit risk departments who does not have a business target. That is, it is called committee आपका, right? So we have 4 5 people and one person must be from the credit risk management department, because like as a banker we might have some sort of limit. So sometime to achieve those targets आपका, we can create some sort of avoid some important documents, but this person is not having, so that's why we are including this one. Pricing of loan should strictly or solely link to the internal credit ratings and other factors like collaterals. No, no, this is also wrong. Two only we have. B should be right answer for this one. What are you guys suggesting? B or A? Okay, I'll check this one. So credit risk assessment and internal rating update should be de-link from the regular renewal exercise and done quarterly or half yearly. This is the correct explanation for this one. So that's why this is wrong, and that's why option B is the correct answer for this. Next one. Which of the following statement correctly describe the aspect of credit risk mitigation? At the transaction level, traditional CRM techniques include आपका collaterals such as first priority claim or the third party guarantee can be used. Credit risk mitigation at portfolio level is primarily achieved through the techniques like asset securitization, credit derivatives, which help diversify the portfolio characteristics. Third one is CRM technique reduce the credit risk. They do not expose the bank to any new risk. आपका no. Okay. There is also आपका legal, operational and others. They are general. These type of risk are involved in this one. So 1 and 2 means option A will be right answer for this one. While CRM reduce the risk, it may increase आपका legal, operational, liquidity and market risk आपका. That is something which is generally part of this one, right? Next one, guys. Which of the following statement regarding the CDS credit derivative CDs are correct? Credit derivative allow bank to transfer credit risk without removing the underlying credit asset from their आपका book. That is the core definition. Credit the uses credit without transferring the asset. We are transferring the आपका risk. Credit insurance and letter of credit offer more regulatory benefit and liquidity compared to credit derivatives. Credit, no, it should be reverse actually. Under the physical settlement in credit derivative contract, protection buyer deliver the reference asset and receive value. आपका value plus accrued interest. This is true. 1 and 3 means option A should be right answer for this particular one. Why you guys are not answering? That's why we have kept these small questions so you can answer. Now the bigger statement will also start. So CDS आपका a credit default swap involve the protection buyer paying periodic premium to protection seller in exchange of protection against the credit events on a reference आपका reference obligations. The third, you remember this one? I guess morning only we discussed this. Cash settlements in CDS transaction is based on the calculation of reference obligation pre-default. No, it is at the time of default. आपका post-default obligation. Small finance bank and RRBs are eligible. They are ineligible in this list. One only. One only means option A will be right answer for this one. Small scheduled commercial bank excluding small finance bank and local area bank RRBs are eligible for this one. Small finance bank are small finance bank are not eligible. This should be small finance bank and RRBs should it should be excluding. Small finance bank and RRBs are excluded from this one. So are not eligible. Open with this one. This should be wrong. They are not eligible. These small finance bank. This. Acha, okay. It is mentioned excluding. Sorry. It is already mentioned excluding. So that's why this is the one. Correct. Next one, guys. Next one. Okay. Now we'll enter in the bigger size of question. Let's go for the first question. Yes, Sir, I missed that one. So RBI capital charge for credit risk and under the standardized and IRB approach. So under the standardized approach, this is unit 13 also, we have discussed this. So under the standardized approach, bank assign risk weight based on the rating from the RBI eligible in external credit rating agencies, primarily for the corporate one. So this can be right. So we have RBI approved domestic credit rating agencies, CARE, CRISIL, this are आपका the areas. This is also true, right? The internal rating agency approach, IRB approach, allow bank to internal probability of default, loss given, maturity, and this is also correct. Next one is in the foundation IRB approach, bank provide foundation advance. This is advance. These are generally provided by the regulator, and this is up in advance. Aapka, it is provided by bank. Under the standardized approach, all bank assign uniform risk weight आपका to borrowers with the same external rating, whereas IRB approach आपका which vary to bank. True है. 1 2 3 5 means option A only will be right answer for the, not D guys. Option A will be right answer for this. What was D? आपका all of the above. No. So statement this was foundation IRB, बैंक प्रोवाइड आपका PD, सुपरवाइज प्रोवाइड आपका LGD and EAD, right? So with unit 13 आपका we discuss around this particular one, right? Next one. So tracking borrower wise credit rating migration on quarterly or half yearly basis provide early signals portfolio credit weakness even if non-performing asset have not yet increased, right? True है. Migration is basically, you remember that chart कि earlier it was आपका A rated 100, next time there was some asset which was rated B, some enter into default, one enter into default, right? The second one is portfolio credit assessment focus only on obligor specific default and does not consider the concentration effect आपका across this one. Portfolio include आप does do include that concentration वाला area like specific limit to the or exposure to the your आपका industry and others, right? So that is the case. Setting quantitative ceiling on the aggregate exposure in lower rating categories help आपका contain concentration risk and uh, setting quantitative ceiling on aggregate exposure in lower rating this help contain आपका content concentration risk and stabilize the expected losses. This should be true. Credit portfolio var value at risk credit var model become more relevant when bank migrate आपका foundation IRB to advanced IRB approach. This should be true, right? If because maximum things are decided by bank, so their internal var will help them. So stress testing and scenario analysis are unnecessary if internal credit approve. No, in internal also they are necessary, right? So 1 3 4 1 3 4 means option A will be right answer for this one. Good guys. चलो next one आपका. So active credit portfolio management is justified as a declining demand for the traditional loan, and the lower risk adjusted return necessitate the diversification into a newer credit product. Introduction of securitization, syndication, syndicated loan, or credit derivative eliminate the need for the gradual business transformation plan. No, they are risk mitigation tool. Transformation plan should in place. Independence of loan review officer is critical to ensure objectivity in reviewing the credit ratings. This is true. The next one is subjecting 30 to 40% loan आपका portfolio LRM annually provide reasonable assurance that major embedded risks are identified. Loan review mechanism primarily focus on sanction stage. No, it is आपका post sanction stage, right? 134. 134 means option B will be right answer for this particular one, right? So option B is the right answer. So statement 2, new credit product require gradual and well articulated business transformation plan. LRM is has a wide scope covering the post sanction follow up आपका, right? That is the one. Next one. Credit risk mitigation. So credit risk mitigation involved reducing credit risk or transferring to another counterparty. Techniques used for mitigating credit risk is transaction label and portfolio label. Identical in nature? No. For different portfolio label, it is different, and at the transaction level, it is different. They are not identical in nature. Collateralization with first priority claim and the third party guarantee are the traditional one, yes. Asset securitization and credit derivatives are mainly used for the portfolio label to reshape the risk profile and achieve आपका diversification. The use of CRM technique eliminate credit risk without creating exposure to any other form of risk. No, like we are, like if we are entering into something like has we are using derivatives or CDS and others, this should be wrong, right? So 134 means option B should be right answer. Very good, guys. You all become pro, I guess, now. Huh? Chalo. Now next one, next question. So under the CDS contract, ABC Bank is required to pay periodic premium to PQR NBFC until the occurrence of the credit events, आपका maturity of the swap, whichever is earlier. So PQR is working as a protection seller and ABC is protection buyer. Since physical settlement is specified, ABC Bank will deliver the eligible reference obligation to PQR NBFC and receive the notional amount. That is also correct. CDS transaction described with आपका describe describe would not be permitted if the reference obligation were a credit enhance or a guarantee corporate bonds. And the serious transaction described would not be permitted if reference obligation were a credit enhance or a corporate guarantee bonds. This should be true, huh? If it is आपका already there, so we will be not requiring any sort of why we will pay extra premium to someone else if it is backed by the guarantee and others, right? PQR NBFC could act as a market maker only if it has a minimum net owned fund of 500 crore. That is the requirement to become आपका the market makers and approve आपका department from this. This is also correct. Even if XYZ infrastructure bonds carried embedded call and put option, they would be ineligible to serve as the reference obligation for CDS. So even if XYZ Construction Limited bond carried embedded option like callable and puttable bonds, they would be no. This is like embedded option will not make them ineligible. This should be wrong, huh? So means 1, 2, 3, 4. 1, 2, 3, 4 means option C. What you guys suggesting? B. Okay, we'll check this one. What was option B? 1, 2, 3 is right here, guys. So bonds with call and put option are expressly permitted as reference obligation under the CDS framework. Rest all are correct. So structured obligations such as credit enhance or guarantee are not permitted as a reference obligation for the CDS things. That is the explanation for this particular one. Done it? Yeah. Next one. Okay, one another question around the tool itself. So now under the total return swap, ABC Bank will receive a coupon income and capital appreciation. So morning only we discussed this one. Floating payment made by ABC Bank in TRS is typically linked with the some indices. That is also correct. A total return swap transfer only credit risk does not expose to the protection of seller to market price movements of this particular one. No, this should be wrong. Credit link note on balance sheet instruments, CLN like the CDS are for the non-conventional and CLN are generally for the conventional like the bank loan and others, right? So this is आपका, this should be true. The next one is investor in credit linked note are exposed only to the credit risk of the reference entity, not to the issuer note. No, it is आपका they are linked with the issuer note. Issuer is basically your SPVs. They invest, though they invest in आपका safe securities, but if in case of reference entity default, they'll be eligible. The next one is credit spread option, provide protection against your adverse widening of the credit spread along with sorry, may structure as a American in this should be correct, right? So credit spread is basically we are making आपका two or multiple open position आपका to deal with this, even if in case it went wrong also with a single hedging, the another can protect the portfolio. Credit spread option can be settled either in cash or through the physical settlement into an asset swap आपका, this should be right also, right? So 12467 12467 A only should be right answer for this particular one, right? Next one, guys. Okay, operational risk and integrated risk management. So when it comes to operational risk, so the operational risk classification, your आपका cause base and effect base, and the event आपका event based classification in all. Then mitigation management or identification, AMA and others approaches which we have run earlier also. And the principle, there are some set of principles around the credit risk management, sorry, operational risk also, right? So that is something which is generally comes under this one. So operational risk is basically a failure in internal process, people, system, and आपका and from the external events. So it is include the legal risk also, but it avoid the strategic and the reputational risk which are driven by the compliances. Cause base and effect base, this is one classification. Cause base आपका why the people or process technology and this. When it comes to effect base आपका legal liability or loss damages or regulatory penalties or write downs in others, right? Then we have the another type, we have event base. So when it comes to event base आपका these are the reason, ठीक है? So it can be internal fraud, external fraud, employment practices and workplace safety, client product and business damage to physical thing, or business disruption and execution and delivery process, right? We have 11 fundamental principles. These principles are provided by the BCBS toward the qualitative changes around or to deal with this operational risk qualitatively, right? So earlier we were focusing around the quantitative or the quick fix. So they come up with these after 11 principle. For this we have 11 principle. When you'll come to the liquidity risk, we have 13 principle after, right? So these are the your 11 fundamental principle which are generally provided by the BCBS to deal with the your आपका operational risk. Organization, that again same areas. Approaches, we just talk around these particular one, right? BIA, TSA and this. So if you have read that unit 13 well now, so that will keep helping you in the remaining topic also. Now let's go for this one. First question. Before this, now there is one important slide. Please let's go. I guess morning we missed this one. Integrated risk management. Integrated risk management approach. So the process of आपका integrated risk management, which consists first strategy, integration of risk management as a key corporate strategy. We have organization, establishment of CRO, Chief Risk Officer position, with his or her accountability to the board of directors. As a part of effective risk management, RBI has advised bank inter alia to have a system of separation of credit risk management function from the credit sanction process. However, RBI has observed that bank follow the diverse practices in this regard. So in order to bring uniformity, RBI come up with the notification dated 2017 17 आपका, and he come up with a dedicated profile, RBI come up with a dedicated profile, that is आपका appointment of CRO itself, right? तो RBI आपका with generally advise bank आपका with this bank should appoint CRO, chief risk officer. Bank should lay down board approval policy, clearly defining the role and responsibilities of CRO. CRO has control and coordinate the function of the risk management department of the bank. Because of the importance, RBI suggested this person should report directly to MD and CEO of the bank. Process is the process of identifying, assessing, controlling, means the strategy, organization, process. Process means identifying, assessing, controlling, and this. And system, risk management system must be developed to provide the information and analytical tool to support the आपका enterprise risk management function itself, right? So that is something which generally comes under the integrated approach of RBI, right? Now let's practice the question. So, which of the following statement regarding operational risk are correct? Operational risk arise only from the human errors, exclude the technology failure. BCBS risk आपका losses due to internal process, policy and external event. One of the benefit of managing operational risk effectively reduce the capital allocation under the this one. So 2 and 3 means option B will be right answer for this particular one. B will be right answer, Alvin sir. Next one, guys. Which of the following statement correctly describe the आपका classification of operational risk event type? Risk by event type. So internal fraud, external fraud, the other areas. Internal fraud involve losses due to act by internal party intended to misappropriate property or bypass regulation, excluding आपका discrimination event आपका, right? Business disruption and system failure include losses resulting from disruption of business operation and breakdown in the system infrastructure. Client product and business practices cover losses due to only from the deliberate violation of fiduciary responsibilities toward the client. Now, it can be others आपका we are doing, let's say we have done some promises, we are not fulfilling this one, obligation and others, right? So 1 and 2 means option A will be right answer. The category include unintentional or negligence failure to meet the obligation in other areas also, right? Next one, guys. Which of the following statement relating to operational risk management principles as per the 11 BCBS committee guidelines are correct? So we have 11 principles. There are few principles which are part of this one. So board of directors must merely endorse the risk management framework. The first statement wrong. A sound operational risk culture is the responsibility of senior management and does not require board approval. This is also wrong. The risk management framework should be fully integrated into bank overall risk management process tailored to size. This true. Only three. Option B will be correct answer for this particular. Very good, guys. Next one. So which of the following statement regarding operational risk management in bank are correct? So senior management must ensure the operational risk identified and assessed only after the product introduced. No. After the formal approval process, all new product activities in this bank must require to disclose their approach to operational risk management publicly to the shareholders. This is also 2 and 3 means option B will be right answer for this particular. Very good. Next one. So operational risk management structure. Board of Director responsible for approving, periodically reviewing the bank operational risk management framework, ensure operational independence and internal control. Operational Risk Management Committee is required to obtain prior approval from board before implementing policies and procedures for manage. This should be wrong, right? They do have that level of independence. Operational Risk Management Department is responsible for identifying operational and material product and system in this. Yes, 1 in 3 means option A should be right answer for this one. Operational risk management does not require board approval for all policies. It is responsible for implementing the board approved ORM framework in this. So that's why A is the right answer for this particular one. Next one, guys. Bank, why आपका a mid-sized commercial bank with growing operation in retail banking want to upgrade from the basic indicator approach to more refined approach आपका. So however it lack robust automation and credit risk management team and this. So this is this, which of the following why आपका under circumstances and what prerequisite must it fulfill? तो basic indicator approach, it does not need आपका business line, it does. Standardized approach, business line mapping and supervisory approval are required. Advanced measurement approach requires 7 years and external law. 5 years advance your foundation require 5 years. This is 7. And it is internal loss data. This is 7. Advance is 7 years. Aapka foundation is 5 years. This is 2. But this should be internal loss data. Internal and external both loss data, not only in external. Standardization approach. Aapka business line mapping and 100% insurance cover is mandatory. No, insurance cover can be maximum aapka 20%, right? So insurance cover, if you are using standardized approach and you have entered into some sort of insurance product, you can use maximum up to aapka 20%, okay? Which the risk which we have mitigated through the insurance and others, right? So that should be right here. Next one, guys. So, advanced measurement approach, and you have to find out the correct. So, scenario analysis used to estimate the potential losses arising from low frequency, high impact events should conducted independently of the loss data and impartiality. No. And the next one is your scenario analysis must use assess deviation correlation with the bank operational network in this. To ensure regulatory compliances, scenario analysis result must be periodically benchmarked against the internal actual loss data. So we can make sure that things are properly aligned. So B will be right answer for this particular one. Which of the following statement correct regarding the context of IRM, integrated risk management? So integrated risk management help organization to capitalize on the potential upside from the risk and not just minimize the losses. The another one we have if the it required means first one should be correct. Second one is it required definition, metrics, reporting, ensure the timely this. IRM is limited to compliance and regulatory. It is related to the it is integrated basically, so it is with all 1 and 2. A should be right answer for this particular one. अच्छा अच्छा okay, sorry हाँ ठीक है. Now you'll get full time. Okay. You can directly come to the question also, right? So because the आपका reason behind the your operational losses, right? The operational risk, different type of operational risk. So first, the issue arising from inadequate staff training and weak segregation of duties fall under the people oriented and process oriented operational control base आपका cause of the operational risk. Losses due to system outage and this business disruption and system failures, that is also true. The cyber attack आपका, which is external fraud, event based, that is also true. Regulatory penalties and this are related to regulatory and compliances, this is also true. Outdated आपका core banking module contributing to operational losses is technology oriented operational risk, this is also true. The next one is operational risk described in the case of static in nature and reduced automatically once new system are implemented. No. Effective management of the identified operational risk can potentially reduce the bank required capital and improve its competitive position. 1 2 3 4 5 and 7 means option A only will be right answer for this particular one. Easy one, I guess. All the line was upper at easier side. Right, next one, guys. So ABC Bank experienced multiple loss event during this. So losses due to relationship manager chiffoning funds. It is आपका internal fraud. True है. Compensation paid for selling an unsuitable product is classified under client, product, and business practices. Third one is your losses arising from ransomware attack are treated as external fraud. That is also true. Damage to a server due to flood is आपका no, it is not business disruption and all, right? So this generally categorized under the आपका physical asset. This not comes under this one. Failed remittances due to the system outage. आपका execution, delivery, and process management is also true, right? So 1, 2, 3, 5. 1, 2, 3, 5 means option C should be right answer. C should be right answer. This is damage to service due to flooding is covered under the business disruption and system failure. It should not come under this one. It is I guess there is one category itself आपका ना damage to आपका asset or something. C should be right answer for this one. Physical damage due to flood and natural disasters classified under the damage to physical asset, not आपका disruption in system failure. ठीक है? Next one, guys. Operational risk. This we have discussed. Next one. Operational risk management principle, and you have to find out the correct one. And that was climate risk आपका, हाँ? Acute वाला case was then आपका, but here it is in that event based classification ना, it is defined as that name only. The answer. ABM question. Acha, okay, it's the answer. So now when it comes to this operational risk management principle 11, The board of director must merely endorse the risk management framework. Its active involvement periodic review is not essential. This is essential. A sound operational risk culture is responsibility of senior management and does not require board guidance. The risk management framework should be fully integrated into bank overall risk management. Tailor to size this. Board should approve and periodically review this particular one. The next one is senior management आपका consistent implementation of policy system this 345. 345 means आपका D will be right answer for this particular one. First two statements are wrong in that particular case. Organization for risk management. So the board of directors should retain overall responsibility to operational risk management net framework, including approval and this delegating day-to-day execution, appropriate management label. First statement आपका what it is saying. First statement true then. Second one is your operational risk management committee is responsible for implementing operational risk management framework approved by the board and ensure uniform this true hai. Third one is operational risk management department should ensure that operational risk assessment is conducted after the launch wrong hai. Department act as nodal department identifying assessing monitoring reporting आपका this is true. The internal audit function may directly manage operational risk. No, there must be आपका independence. So 1 to 4 means option C should be right answer for this particular, right? Option C will be right answer for this one, guys. Right. Next one. This question we have discussed. Okay. Integrated risk management, right? You can directly come to the question. They ask this type of question this time also na in ABM. Like they'll give you one story and then they'll ask you question. So whenever you see these type of question, na, you can first come to the statement or this line itself. If they like that is related to guidelines, you can directly come to this one. You can save your time. So when it comes to appointment of CRO, reporting directly MD CEO, strengthen the independence, authority of the risk function, yes. The second one is separation of the credit risk management function from the credit sanction process is aimed to avoiding conflict of interest and improving the objectivity in assessment of risk. Third one is integrated risk limit help आपका communicate the bank risk appetite uniformly across all categories in this. Integration आपका this हाँ this should be correct also. Next one आपका bank wide report should considerate exposure across departments such as treasury and this. Under the Basel 3, adoption of advanced internal risk measurement approach can increase capital requirement even if robust check. No, it is not necessarily. It will decrease basically. 1, 2, 3, 4. A will be right answer for this one. A will be right answer for this one. Right. So rest all statement are correct because Basel 3 always after potential reduction in capital requirement. If you will be adopting that particular one, it will reduce, not after increase the overall areas, right? Next one, guys. So when it comes to आपका integrated risk management approach as advice for the bank must ensure CRO report directly. This we have solved here. The CRO must directly report to a risk management committee. No. MD and CEO. No, we didn't. Like this is new. Integrated risk management required top-down policy framework aligning with bank strategic objective and overall risk appetite. The next one is CRO responsible for credit appraisal. No. Basel 3 provide incentive for IRM adoption by allowing reduced capital structure in this. True है. RBI guideline 17 mandate आपका CRO to report this. That is true, right? So 245 means option C will be right answer for this particular one. Correct, hey guys? Next one. Okay, now the next unit आपका which we have, that is liquidity आपका liquidity risk management. So that next unit आपका, right? So when it comes to liquidity, the first part is आपका the potential drivers. The option 7.3. So this is your potential drivers for the liquidity risk. Okay? Internal and external. One question you can expect around this. Then we have type of liquidity risk, sound principle. Again, we have 13 principle here. Then governance, identification, stress testing, all these particular are the here, right? Role of MIS and the आपका internal control and all, right? So when it comes to your liquidity risk आपका, this is something कि bank won't be able to liquidate their securities and they won't be able to pay off their liabilities, obligations आपका, right? And for that, if they are entering into some other contract, it is like if we are going for quick borrowing, so it will increase some sort of cost आपका, right? So liquidity is a capacity to fund increase in asset and meet both expected and unexpected cash and collateral obligation at a reasonable cost without incurring आपका unacceptable losses. But if we want to achieve this, that is आपका creating a liquidity risk. So usually in our normal business, what we are doing, we are accepting liabilities, we are creating आपका asset, but the time gap, let's say we accept liability for 1 year and we created an asset for 5 years. So there is a आपका maturity mismatch of this particular one, right? 4 years आपका. So at the end of first year, when asset will get mature, how we are going to pay this one? If that person do not, or the depositor do not roll over or reinvest with our bank, right? So bank are maturity transformation agent. Borrowing is short term and lending is for long term. Mismatch is an inherent आपका feature of the banking. So that is something which generally comes under this. So it is आपका liquidity risk, which is It is part of your ALM also, asset liability, and it is part of your market also. That is related to when you want to be able to liquidate your position, open position. So it is available in both areas, and that's why it is get managed by the आपका treasury department, and the committee is your आपका elco, again elco, because elco treasury they have linkage, and that's why they are managing this particular one. So what we generally want to achieve from the situation, so when it comes to the situation, like bank, they want to achieve solvency and liquidity both. Solvency means the profitability, positive आपका net worth, and liquidity is this. But if you have to make choices out of these two, liquidity is must, because liquid profitability can be generated in future, but if there is liquidity issues आपका, there will be आपका reputation issues, or it will lead to many other आपका risk and other stream. It's different from both and linked to both also. Yes, we can say that. So that is something which generally comes under this. Now the most important area, key consideration of liquidity risk, under the tools: availability of liquid asset, volatility of deposit, degree of reliance on the volatile sources, level of diversification, historical trend of stability of deposit, quality of maturing asset आपका, right, market reputation, impact of off balance sheet exposure on the on balance sheet, if there is continuous crystallization, or आपका, let's say we have issued bank guarantee that become आपका fund based, so that will create issue contingency plan. This is something which is very very important. So basically, potential liquidity drivers, right? We have two major, like what are the reason behind the liquidity risk which is generally faced by a bank itself, right? So there are two. One is internal, the bank itself, the position which we have made. Like let's say we have high off balance sheet exposure, heavy reliance on short term corporate deposit. Corporate deposit, they have few in numbers. So if you do not have diversification through the retail, or like especially that state deposit, like let's say आपका there is a state, sorry, there's a bank which have 5 or 10 state deposit with them, right? Though they are having a huge money, but if government come up with something, and due to that, if those funds go transfer to some other bank, they'll face some sort of problem. So eventually it is leading to the concentration issues. Negative gap आपका, ठीक है, liability mature sooner in this ALM problem. Rapid expansion of the so like we are accepting deposit for a lesser period and rapidly creating asset for the long term period. Concentration of deposit on short tenures, the sources of funds, less allocation to liquid government instruments. So these are the act which is done by the bank, or which is basically in control of bank itself. When it comes to external factor, ठीक है, which is beyond the control of bank, so sensitive financial market depositors, economic shock, right? Low internal and external means it can be countrywide, or it is आपका outside the country also. Low or slow economic performance, decreasing trust in banking sector, sudden massive withdrawals, unplanned termination of government deposit and others, right? So these are some areas which is generally the key आपका or the potential liquidity drivers for a bank. Like whenever we are आपका dealing with these particular one, so that is something. And now the next one, okay, this will give answer to your question, Rani ma'am. So categorizing the liquidity risk. So we have funding liquidity risk, the risk bank will not be able to meet efficiently the expected or unexpected current and future cash flow and collateral need without affecting their daily operation or its आपका financial condition. In your आपका book, let's say you have some obligation, you have to make the pay off the liability, and if you won't be able to convert, like you remember that basis or call risk, funding risk, which we have discussed now, so they were all over around this particular one. Market liquidity is basically when the risk that bank cannot easily offset आपका eliminate the position at the prevailing market price, or like sometime it is partially liquid, sometime it become आपका fully illiquid, right? So this is in your आपका market book itself. So it can be twice in both the areas. Now when it comes to liquidity, आपका risk management principle, तो 2008 after this global financial crisis, BCBS they generally release आपका a set of principle. We have 13 principle which are generally part of this particular one. ठीक है? So this we have discussed many times, but like I'll not suggest any sort of ratification around this. They are in general guidelines, qualitative approach toward the management of your आपका liquidity risk. ठीक है? This is qualitative approach kind of कि how bank should the similar to those आपका operational risk. So prior to that, in September 2008, BCBS come up with these particular one because that global financial crisis, the major reason behind that particular one was आपका liquidity risk. So these are the 11 principles which are generally part of this. Now when it comes to the areas आपका, ठीक है, so when it comes to your the governance structure, so we have board of directors. So overall आपका responsibility same thing, right? Risk management committee आपका report to board, evaluate the overall risk including liquidity. ELCO is the committee here, prime committee, top management ensure adherence to risk tolerance, implement strategy. And we have ALM group आपका operational staff analyze monitor report profile to ELCO आपका prefer the forecasters. Right now I hope everyone is comfortable with this governance things and others in case of this, right? Now when it comes to the measurement part, we have two areas, right? When it comes to capital charge or the measurement for this one, we have two areas. One is stock approach, another one is flow approach. So when it comes to stock approach, where we have, it is based on the ratios. There are 7 ratios which are generally part of this particular one. When it comes to flow approach, it is based on the different time horizon, right? Let's say आपका liquidity position in for आपका 1 day, 1 week, 1 month, 6 month, 1 year, 2 years, 4 years, kind of this, right? So stock approach, it is based on the ratio balance sheet आपका. Snapshot of specific point of time. Limitation is indicator आपका past action, means the ratios limitation itself is about the, like we are using the data from the balance sheet or profit and loss account of the past, and we are, these ratios are that is the core limitation of the ratio analysis key. They are assuming ki this is the past, the future will act accordingly. So that is one parameter which we are using here. Flow approach आपका, ठीक है, तो this is आपका liquidity today means the liability plus the asset inflow outflow today, tomorrow, 7 days, आपका 8 days or any other time horizon. So based on the maturity ladder or time bucket, forecast cash flow mismatch over the time, and futuristic and systematic, which is generally part of this one. Okay? So when it comes to ratio analysis, 7 ratios are there. When it comes to your आपका stock approach, ठीक है, stock approach which work around these one. So we have first one is volatile liability. So it is measure the extent to which volatile money support the basic earning of asset. High positive side, high positive numbers is equal to risk. Industry average is आपका 40. How we calculate? Now you have to remember all these ratios, huh? Because many times we have experienced, they have asked question around the ratios and others. So 7 ratios are there. This is the part 2. So the 7 ratio and their significance. All right. The another one apart from this, we have the next one is your stress testing in CFP. This is part of your principle number 11 or 11 आपका, right? So stress testing, and especially when it comes to CFP, contingency funding plan, this is something your plan B. This is like stress testing is basically we are evaluating the existing system, okay? How we are like the existing model and others, how they are working. We are checking their robustness with the stress testing. it is आपका like when we come up with some application, we do some sort of backdoor testing. Okay, when user will use that particular one, how it will react. So accordingly, here also we have different scenarios. We are using this. So regular test for the short term and protected scenarios. आपका identify strain, identify potential liquidity shortfall, ALCO action, and we create a contingency plan. So contingency funding plan is basically your plan B. In that situation, if that situation will become, how we will deal with that particular one. So that is here आपका CFP. Clear line of responsibility, who will be doing what during that period, escalation procedures, and operationally robust. Right, that is something which generally comes under this particular one. Then the another one आपका management information system, so use of MIS. There is one another part आपका, हाँ this is one, ठीक है. तो this is आपका the another reporting things. So reporting requirement to RBI. So liquidity reporting is must RBI in different time horizon. Like let's say these are the time horizon. Let's say next day, 2 to 7 days, or आपका more than 5 years. तो बैंक need to provide आपका 5 reporting. So report in 5 parts. One is domestic currency Indian operation, which is आपका fortnight basis. Then foreign currency Indian operation, again आपका fortnight basis. Combined Indian operation आपका fortnight basis. When it comes to overseas operation, it is आपका monthly basis. Consolidated आपका quarterly basis, right? तो first 3 आपका fortnight basis and the remaining 2 आपका monthly and quarterly basis, right? So while the अच्छा yeah, statement 1 2 3 required this, and this is आपका there is periodicity in respect of the each part of the written itself. तो bank they have to report आपका the areas. Apart from this, the statement of structured liquidity domestic currency Indian, हाँ the same one. There's this fortnight basis. First report आपका within a week from the reporting date. Please do remember this timeline also, right? The second one is part 2, part A2. Damn. So that is your statement of structured liquidity foreign currency Indian operation fortnight basis, and आपका within a week from the reporting one, right? The part 3 is your आपका combined Indian operation fortnight basis within a week itself. So all these 3 report go simultaneously. Statement of this overseas operation fourth one monthly basis within 15 days आपका, ठीक है. Like let's say आपका June month, then आपका before 15 July you have to report this. Then when it comes to the fifth one, consolidated bank operation quarterly and within a month from the end of the quarter itself. So reporting date will be 15 and last date of the month. In case आपका डेट हैव हॉलीडे, द रिपोर्टिंग डेट विल बी द प्रीवियस वर्किंग डे, लाइक 15th अगस्त. तो इट विल बैंक नीड टू रिपोर्ट आपका ऑन 14th अगस्त itself, right? Reporting date will be the last working day of the month for this particular one, right? For this one आपका last working day of the month. If let's say month is for 30 days and 30th is आपका holiday, so it will be last working day. Okay guys, so this is आपका, this is bit important, huh? They ask this question statement based as well as आपका the small case studies around this. So please do remember that timeline. So which of the following statement regarding liquidity and liquidity risk in bank are correct, guys? So liquidity risk arises from bank inability to meet maturing obligation without adversely affecting its financial position आपका, right? So then another one is mismatch between the maturity and liability is a fundamental and unavoidable part of the banking operation. Liquidity risk is considered a long-term concern for bank, and it is often आपका considered as strategic risk. No. So it is आपका, it is short term mostly. It is also known as आपका, it is called that emergency ICU risk. आपका, it is also known as ICU risk. 1 and 2. 1 and 2 means option A will be right answer. Maturity transformation agents. After this, it is short term mostly, and it is ICU risk for the bank. If you will not deal with this, your situation will become worse because it will lead to many other आपका areas. Like if depositor is not getting their money on time, they'll get आपका offended, right? And then they'll do some sort of advertisement of bank, which is negative, right? Negative promotion. So next one, which of the following statement correctly identify potential liquidity risk drivers in bank? High off balance sheet exposure and reliance on short term wholesale deposit increase the liquidity. Answer this question, guys. Very important one, huh? Very, very important one. So liquidity drivers, just now we have gone through those particular one. So expecting right answer from everyone. Come on, Subhas sir. Sanmuga Sundaram. Sanmuga Sundaram sir is saying option D. Okay. So first it is come आपका high off balance sheet exposure, and this they are internal factor, right? So reliance on this they lead आपका they come under the internal factor. Rapid asset expansion by bank that exceed आपका available fund on the liability side are cause liquidity problem. True है. Depositor trust and economic are do not influence आपका liquidity risk in bank. Wrong है guys. It does. Like it is an external factor. It affect the, like basically if like there was a time when Yes Bank was facing this particular issue after that problem, right? So 1 and 2 only. 1 and 2 means आपका option C should be right answer for this particular one. Correct है? C will be right answer. Next one. Which of the following statement about the liquidity risk and management are correct? Come on, guys, everyone. So, funding liquidity risk arise when bank cannot meet expected and unexpected cash flow without harming its daily operation or the financial condition. Market liquidity risk refer to the inability of bank to offset the position at the prevailing price due to inadequate market depth disruption. The third one is a Basel committee principle one require bank to maintain sufficient liquidity, and this that is true, right? All correct. D should be right answer for this. Very good, sir. So option D will be right answer for this one. Next one. Identify which of the following statement are correct relating to governance and operational management of liquidity risk in bank. Answer, guys. Elvin sir, D is the right answer for previous one. Prem sir also. So the board of director must articulate a liquidity risk tolerance aligned with the bank business strategy and role in the financial system. Senior management responsible for developing liquidity risk policies must report liquidity development to board. A bank should have funding strategy that relies on a single source. Wrong hai, concentration, right? 1 and 2. 1 and 2 means आपका option C again will be right answer. ठीक है? Single source will lead to the concentration risk and all. Next one. Which of the following आपका liquidity risk management policies, strategies and practices are correct? The board or the delegated committee should approve liquidity risk policies, strategies, and आपका this true है. Then next one is liquidity risk tolerance level can be articulated through the fixing maturity specific tolerance label. आपका flow approach, stock ratios, stock approach, yes. तो option both are correct here. Means option C will be right answer for this particular one. Correct hai? Very good. Nice. Next one. Okay, answer this question, guys. So a bank should not assume voluntary risk exposure exceeding beyond the 10 years आपका. Uh, the means basically like when we are doing for this one, so at the time bucket is like we are not doing something key this will be for 10 year 30 year 50 years and all, because calculating that much data is kind of unrealistic, so that's it should be wrong. Long term resources must be at least 80% of long term asset account according to the maturity mismatch in this. Long term resources must be at least 80% of this. 80%, it should be less than that. आपका 60-70%, हाँ. Long term sources must be at least, okay, we'll check this one. Short term resources are defined as those maturing with 6 months, and a medium term between 6 months to 3 years आपका, right? This should be correct. So means 1 3 or 1 2 3. What you guys suggest? 70 आपका okay. So means this is आपका wrong. So this is 70%. So this is आपका wrong. 1 3 means option A is the right answer for this. Very good, sir. Nice. 70% आपका, right? Next one. Which of the following statement about RBI liquidity reporting and internal control are correct? Very important one, guys. So, which of the following statement about the liquidity reporting and internal control are correct? The first statement is the statement of structured liquidity is required to be submitted 5 part, including domestic currency, Indian operation and consolidated. True hai. Statement related to domestic currency, domestic and foreign currency must be submitted on fortnight basis. Wrong hai. The third one is your reporting date for fortnightly return is 15th आपका last day of month. True है. And these date are holiday, so it is a previous day. This is also correct. So 1 and 3 means option A will be right answer for this. Very good. A will be right answer. 1 and 3. What is B? 2 and 3. 1 and 3. Huh? A is only the right answer, right? So A is the correct answer for this particular one. So it is आपका fortnight, and this is आपका 15 in this, right? Next one, guys. So now you can come to this. So the bank present difficulty primarily arised from the mismatch between the maturity asset and liability rather than from the negative net worth. This is true, आपका right. So they are facing आपका they have with short term deposit they have created आपका long term asset. Even though the bank is solvent, it can still face liquidity risk if it unable to meet the obligation. Yes, true है. Reliance on bulk deposit and short-term market borrowing increase degree of dependence on volatile sources of funds. Yes. Weak quality of maturing asset can aggravate the liquidity stress. आपका that is also true. Liquidity risk is largely a long term. No, it is a short term. आपका this is wrong, right? 1 2 3 4 1 2 3 4 option A only will be right answer for this particular one. अच्छा सुभाष अच्छा oh, sorry okay next time I'll remember this. I guess the first one only is the right answer na? Yes, next one guys, next one. So ABC Bank has recently आपका rapid expansion this आपका this over the quarter. Now I'm increasing the size, huh? Otherwise it is not visible. It is visible here. Okay, I'll just bank market rumor have led sudden down for this situation bank is. So first one is your just wait, I'll increase this. So the bank is exposed to funding liquidity risk due to reliance on short-term wholesale deposit and sudden withdrawal. आपका yes, they can lead to the liquidity risk. The presence of negative maturity gap in short-term bucket आपका 1 to 3 months can intensify the liquidity stress during the adverse condition. Yes. Third one is limited holding in unencumbered high quality liquid asset weaken the bank inability to withstand stress scenario. LCR वाला case आपका right. Annual stress testing alone fully justify other requirement of this? No. A failure to update the contingency funding plan reduce bank preparedness for the emergency liquidity आपका concentration of deposit from a few institutional depositors increase vulnerability of liquidity shock. Minimal public disclosure of liquidity position strengthen. No, wrong है. तो 1 2 3 5 6 1 what you guys think? Option C 1 2 3 5 6 आपका yes बिल्कुल सही है 100% right. और option A 1 आपका 1 is right here. Option A 1 is right, so it should be C only, right? So 1 2 3 5 6 1 what we have 1 2 3 5 6 the explanation is correct आपका, but the only thing is the options given are wrong. So option C will be right answer for this particular one. Next one guys, liquidity risk management for bank. on guys. So a bank can be solvent without being liquid or vice versa. Yes. A liquidity issue in a bank can trigger systemic risk beyond the individual situation. Yes. The next one is liquidity risk management is only relevant for bank facing long-term solvency concern. No. Reputational risk can emerge due to आपका liquidity risk. Liquidity risk solely related to the availability of fund at given point. No, many other aspects are also there. 1 to 4. 1 to 4 means option C will be right answer for this particular one. Right. This we have solved. Same question. Should drivers. Okay, please go through this. The governance of liquidity risk management in bank are correct. Now I can increase the size. People are sleeping early nowadays, huh? I guess. Srikant sir left here. Namanji sir didn't join today. Hmm? The governance of liquidity risk management in bank are correct. So board of director responsible for setting liquidity risk strategy, policies and ensuring this particular one. And the second one is risk management committee. Uh, Risk management committee report to ELCO. ELCO report to risk management committee. ELCO is tasked with implementing this through him. The next one is ALM support group is made up for top management. Wrong here. Board of director responsible for formulating bank contingent funding plan in this true hai. So 1 3 5 easy one guys. Option A will be right answer for this particular one. Right. Next one. I'm searching for that liquidity driver wala question. Okay, please go for this. And please go for this question also, huh? The ratio wala part, right? After going through ratios only, please go for this. Now go for this. So stock approach to measuring the liquidity risk is backward looking and आपका reflecting the liquidity. Why it is backward looking? Because it is based on the ratios and ratios we are taking data from the आपका the balance sheet and profit and loss account, the past data. True है. Flow approach आपका forecasting and various future time this आपका different time horizon like 1 month आपका 6 years those kind of things. Yes, future आपका forward. The stock approach considers superior. No, flow approach is more important than this when it comes to the comparison. The flow approach is superior than this आपका stock approach. 1 and 2 should be right answer for this particular one. A is the right answer, guys. Please do remember these line. तो flow approach, not stock approach, आपका superior and forward looking in this. Next one. So stress testing and contingency funding plan. Stress testing should consider both back-end, आपका bank specific and market-wide stress scenario, including the complex financial instrument or balance sheet exposure. The outcome of the stress test should be used only to build the liquidity cuisine, but not influence the bank contingent funding for both actually. A result of stress test indicate vulnerabilities must be reported immediately to board and the Reserve Bank department आपका. Yes. Next one we have CFP should detail escalation procedures and this. The next one CFP need to be attested periodically but do not require annual review. It does basically. This annual review is must, so it is wrong. So 135, 135. We do not. Achha, 134. Sorry, 134 means option C will be right answer for this particular one. Correct, guys? Very good. Well done. Next one. Oh, sorry. Next one we have the final unit from your आपका module B. Congratulations, guys. We have achieved the target. That is Basel 3 framework on liquidity standard. Very small unit. As you can see, it is about LCR, आपका liquidity monitoring tool, and we have NSFR, LCR, NSFR, and the आपका liquidity monitoring tools, right? So liquidity risk, see, when you'll go for the foundation class, what you'll see, the entire areas, the liquidity, आपका risk and others, which we have discussed during that period. So during आपका this during your after this global financial crisis or with this Basel 3, we included आपका two other tool. One is LCR, which is ultra short term 30 days आपका, which makes sure कि bank having adequate funds for next 30 days, or what, let's say in next 30 days our liability is supposed that 500 crores, so we are maintaining a cuisine more than आपका 500 crores in term of unencumbered liquid asset. So if any time we face any sort of situation, we have enough money in hand and we can, within this 30 days time frame, we can deal with that situation. We can find out some suitable solution for that particular problem. That is the motive of आपका LCR. When it comes to your NSFR, it is आपका in a time horizon of 1 year, right? Morning only we discuss आपका area. Now when you'll come to this one, there are some additional pointers, right? So LCR is your how we calculate LCR. It is high quality liquid asset. Sometimes you'll see unencumbered high quality liquid asset divided by net cash outflow in next 30 calendar days. And bank need to maintain this at APA greater than or equal to 100%. Of the stress scenario, run off the retail deposit, significant withdrawal by the this like why we are generally maintaining this. If we face this kind of issue, loss of unsecured wholesale funding, loss of secured short-term funding, आपका credit rating downgraded, or increase in market volatility or unscheduled draw. So if we face this particular one, how you will meet with the आपका liquidity requirements and all. So the solution is the money which you have kept aside, that is your solution for the LCR things, right? During COVID, we started implementing this from 2015. 2019 we achieved 100%. During COVID-19 RBI decreased this one, but again it is आपका at the आपका 100% itself, right? So one, now LCR stress scenario, and this our Basel committee prescribe LCR stress scenario combine bank specific or market wise areas. So the tool, just now we have gone through these particular one. This is one. This is important. HQLA. So high quality liquid asset. So what include in HQLA? High quality liquid asset easily आपका saleable or pledgeable asset that can convert it into cash immediately. So basically, high HQLAs are basically the asset which we can easily convert into cash in that, even in आपका worst situation or that stressful situation. They are having a characteristics of आपका credit quality, market liquidity, correlation with risky asset, transparent valuation, active market makers. So three categories are there. One is आपका label one, HQLA label one, sovereign securities, no haircut is required. HQLA label 2, 2A, आपका high quality liquid asset, 15% haircut will be applicable. Like let's say you have HQLA 2 asset worth rupees 100 crore, so it will consider as 85 crore only, while you will go for the आपका LCR management. Label 2B, it is lower liquidity, आपका 50% haircut will be applicable. This part is bit important. Huh? Limitation on inclusion, label 2 A plus B together cannot exceed आपका 40% in total HQLA after haircut itself. When it comes to आपका label 1, so bank should hold the remaining आपका 60% down, 60% downside it should be आपका label 1 securities and others, right? So that we do not face any sort of problem at the time of liquidation things, right? So please do remember this particular one. Like when it comes to आपका zero haircut, cash, government securities, foreign sovereign securities. When it comes to label 2A, it include corporate bonds, double A minus at least, commercial paper this. Label 2B, आपका RMBs, or we have common shares, equity shares and others. So this rule also you have to remember for this particular one. Clear guys? Now, one another provision, policy, right? So, facility to avail liquidity for LCR. So, let's say if a bank mandatory ratio is 100% and above than that, if any bank miss that particular target, they have to immediately report RBI, and आपका policy facility is there. They can take loan under this particular one, or they have to provide the आपका plan कि how we are going to revive from this situation to the RBI. So allow bank आपका to meet LCR by availing liquidity against certain securities under stress, can be used only after आपका exhausting the all HQLAs including MSF आपका asset in this 90 days MSF norms, interest raises 200 plus आपका repo rate. ठीक है, the overall interest rate will charge by RBI is repo plus 200 basis point means 2%. Eligible securities eligible for LCR computation, government securities in excess to minimum SLR, MSF and FOLICER. We have all securities आपका valued at the current market price, irrespective of held for trading, held for maturity, held for sale itself, right? So that is something which generally comes under this particular one. Then the another part आपका, right? The another part we have to this reporting requirement also, right? So आपका Basel 3 liquidity returns आपका, तो when it comes to monthly basis आपका BLR1 your Basel liquidity return LCR we have to report on monthly basis. Next month आपका 15 days. Funding concentration monthly within आपका 15 days. BLR3 unencumbered asset आपका क्वार्टरली बेसिस. 4 आपका करेंसी LCR बाय करेंसी एंड आपका अदर इंफॉर्मेशन मंथली बेसिस. ठीक है, ओनली unencumbered asset आपका क्वार्टरली, अदरवाइज एवरीथिंग इज आपका मंथली बेसिस, राइट? तो द रिपोर्टिंग रिक्वायरमेंट अंडर दिस पर्टिकुलर वन. Next one we have आपका NSFR, the another tool which is targeting more than this 30 days. It is a time horizon of 90 days, right? 1 year, sorry. So we have available stable funding आपका, the long term sources or the required sources against the payables आपका in a time horizon of 1 year. So reduce the funding risk over a 1 year time horizon. आपका Indian bank, solo or consolidated foreign banks, they are generally eligible for this particular one. Done है? So here also we have a chart आपका available source of fundings, what will be the ASF charges and others, required source of funding also आपका, right? Required stable sources of funding, what will come under in this particular one. There is a huge list also, right? You can go through this particular one. So LCR and NSFR 30 days आपका, it is 1 year structural. Acute आपका liquidated is structural. Stock HQLA divided net outflow ASF RSF. Whole liquidity asset limit आपका wholesale reliances and all. LCR ensured you survive from any storm. And SFR is आपका build house that can withstand in the climate itself, right? So this is all about your unit number 18. Let's go through some question, guys. So which of the following statement reflect correct आपका post 2008 global financial crisis and Basel 3 framework? Under Basel 3, financial institution had significant discretion in determining the risk weight, allowing some bank to underreport their risk weight asset. Thus, Basel 3 introduced two supervisory capital triggers, 11.5 conversion this 9% आपका another one, right? True है. Third one is the average ratio introduced under the Basel 3 risk weight asset designed to enhance the capital adequacy, penalizing the risk of balance sheet. No, this is wrong, no? Basel 3 is a risk weight measure. It is a non-risk weight measure, first of all. 1 and 2 only should be right answer for this one. Means yes. So leverage ratio under the Basel 3 is a non-risk based आपका, especially in this case. Next one. Which of the following statement are correct in the context of high quality liquid asset and associated regulatory framework for bank? So, okay, answer this one, guys. What will be your correct answer? Just now we have gone through this. Label two asset including A and B can together constitute up to 60%. This statement is wrong. It is 40%, right? 40%. So this is आपका wrong here. Asset classification as HQLA must be unencumbered and capable of being converted into cash, minimum and no loss. True है. Label 1 आपका near cash equivalents this, no haircut. 2 and 3. 2 and 3 means option B will be right answer for this. Very good, guys. Next one. Which of the following statement regarding Basel 3 liquidity risk monitoring tool and disclosure requirements are correct? The conceptual maturity. Okay. So the contractual maturity mismatch matrix help determine the liquidity gap between inflow and outflow. आपका 10 True है, right? 6 month, 1 years in this. The concentration funding matrix increase funding from a single, no, wrong hai. That is concentration. To matrix should be like diversification. Available unencumbered asset are those that can be potentially be used for collateral in central bank in this. Yes. 1 in 3 means option A will be right. A will be right answer for this one, guys. Yes. Next one. So NSFR aim to ensure bank fund their asset and off-balance sheet activities with stable source of funding to mitigate the long-term funding risk. आपका NSFR was made applicable to all Indian and foreign bank operating in India from January 1st, 18 without any further deferral. No, there was a deferral during the COVID period. So funding with residual maturity less than 1 year provided by sovereign PSCs, ASF factor is 0%. No, it is आपका 1 in 3 or 1 only. ठीक है. What do you guys suggest? Rani ma'am is saying A, so I'll go with Rani ma'am. So this is wrong. Means it should be आपका downside. It is 50% or 20%, right? It should be 50 or 20 then. हाँ. It is आपका this is affected आपका 50%, not the 0 1. And then guys, this is we have done. Okay, this is the last question, guys. This is the last question. So, when it comes to this particular one, LCR 86% on this. During the same month, it experienced a downgrade of public credit rating of 2 upper notch and triggering a new potential additional collateral under this one. Bank is downgraded on the use of this, and they have violation of this. So the restore आपका LCR plan, which is provided by bank, sell non-HQLA security to generate cash, immediately halt a fresh lending in this, submit in this. तो आपका first scenario, the LCR 86% on this is non-compliance with RBI. Yes, because it should be 100%. The downgrade credit risk आपका subsequent collateral call BCBS defined stress scenario. Yes, where we have large exposure. Drop in 77% temporarily allow to RBI with a reason and corrective measure is provided. Yes, this is also true. Selling a non-HQLA increased stock of HQLA. It is not necessarily actually. Restoration plan must be submitted to RBI upon breach of minimum LCR requirement irrespective of the percentage 100% true, right? So means 1 2 3 5. 1 2 3 5 means option B should be right answer for this particular one. There is no 1 in 3. Which one आपका सुभाष sir? Which one you are saying? This one क्या? These statement you are saying? No, this is true. So option आपका this option B should be right answer. Yes. So option B, non-HQLA does not directly increase this unless proceed is reinvested into HQLA and others. Okay. Fine. ठीक है. तो this is आपका all about your module B. I'll be uploading this PDF just after the dinner. It will take 15-20 minutes, and today I have to prepare for morning session also. Tomorrow morning, guys, we will be आपका preparing the concept part from your module C. So we will be revising module C content आपका concept core concept areas. So similarly, so that evening we will be practicing around the things, all the question part and others, so that we can finish up the module C tomorrow itself, right? चलो नहीं, module C and D आपका, like we have many things, the repetition and all, right? But when it comes to marks wise na, all module are equally important. So please do not underestimate कि like what happen ना, when people start BFM, they मतलब वो module A and B के एरिया में ही रह जाते हैं, because this is something आपका like the entire things which generally comes from this one. So this is very big and vast also, like so people they generally get confused आपका वो उसी माया जाल में रह जाते हैं, they forget about C and D. तो C and D is marks wise it is equally important. तो we will be आपका handling that particular one, ठीक है? तो tomorrow I'll see you at 7 o'clock, and we will continue our discussion with module C. Evening we will be practicing again unit wise for all these particular. All right, guys. So this is it from my side. Thank you for joining this session. Thank you for watching this session. See you tomorrow. Hope you enjoy the session.